I thought nothing of YouTube. I was probably the last person in my circle of friends to discover YouTube. And I remember when I did, I thought, this is so strange. There's people making videos in their rooms and other people are watching them.
So she figured, why not give it a shot?
I one day posted a video because I was sad and I wanted to be creative and happy.
She didn't know how to edit video or write scripts, so she winged it.
It was so bad and so cringe. And my expectation was literally nothing. I was like, I'm gonna put this video up, a couple of my friends are gonna watch it, probably make fun of me, and that's gonna be the end of this. The second and third video came from, wait, 70 people watched my first one, can I get 80 to watch the next one?
She kept creating, she kept posting, and the viewers kept coming. Lily had found an audience.
A lot of the comments were, oh my God, there's a brown girl on YouTube.
More specifically, Indian. Lily's parents immigrated to Canada from India, and Lily was born and raised in Scarborough, near Toronto.
My home life was awesome. My parents, even though I portrayed them to be quite strict in my videos.
Oi, Lily, where's the rest of your skirt, huh? I teach you like this to walk around like this, showing everything to everyone?
They actually aren't like that at all. They're pretty modern and pretty cool.
Your dress is short. Don't know what for.
And were pretty lenient with me. I mean, I got away with a lot of things. I was a brat. I was a brat.
She had a different idea of what she wanted out of life than other kids. In a grade school graduation slideshow, her classmates said they wanted to be lawyers and doctors.
And then I came up and I was like, rapper.
Making out with your friends, man. But then you say that you hate hoes.
I could just feel my parents being like, why?
Because that's just not something women really did in the Singh family.
I know there was a ton of people that weren't happy about my birth being a female, so I think, and that's some real-ish, but it's a real thing. The best thing I could have done to prove to so many people that didn't want my mom to have a daughter was to become Superwoman.
What up, everyone? It's your girl, Superwoman.
It was the name of Lily's favorite hip-hop song by Lil Mo featuring Fabulous.
I love the song so much because it was one of the only songs at the time that was an empowering female song, where Lil Mo's going on about, like, I will save guys with my superpowers, and I will save girls with my superpowers, and I am the Superwoman. I thought, this name that I've had for so long that empowered me when I was younger, I'm gonna make this my screen name. Maybe this should be a new series.
Superwoman didn't just burst onto the scene overnight with a viral video. It was a steady climb fueled by hard work.
The moment that I thought this is going somewhere and this could be a career was the first time I performed internationally. It was in India. And it was the first time where I was truly across the world and people knew my videos.
Singh has transformed herself from a bratty kid to an internet personality to a media mogul. She starred in a feature film, A Trip to Unicorn Island, in 2016. And her book, How to Be a Boss, hit the New York Times bestseller list in 2017 while she was on a 30-city international tour. Lily started out with the goal of getting millions of subscribers and financial security.
Hurry the hell up.
But after surpassing those goals, success has new meaning.
I really come to terms with the fact that my definition of success is what's the best legacy I can leave behind. And it's not the number of views, the number of subscribers. It is the number of people that can say, this girl changed my life or changed something in my life positively.
CTE is often found in the brains of deceased athletes, military veterans, and others with a history of repetitive brain trauma. Hundreds have donated their brains to the VA Boston University Concussion Legacy Foundation Brain Bank.
This is a former NFL player who died in his early 70s, and this is a veteran who also died in his early 70s.
Dr. Ann McKee dissects these brains.
The hippocampus and the mammillary bodies are very important for memory. I can see that they're slightly affected.
McKee recently dissected the brain of former New England Patriots player Aaron Hernandez, who was convicted of murder and later committed suicide.
You'll see right away that the brain is showing signs of shrinkage. You can see the crevices in the brain that you can't see in the normal.
McKee says Hernandez's severe case of CTE impacted his decision-making, depression, and ability to control rage and aggression. Right now, she thinks we're underestimating how many people have CTE.
We were able to distinguish between CTE and controls and CTE and Alzheimer's disease. The next question is, can we do this in the blood, and can we do this in living people? And we aren't there yet with those answers.
But the need for a diagnosis in the living is motivating companies such as Quanterix in Lexington, Massachusetts, to work faster on technology that could diagnose concussions and CTE in as few as 30 minutes. Kevin Rosovsky is the CEO.
It's like a high-powered microscope. And so by doing that, we can see little biomarkers that you couldn't see before in the blood.
Quanterix received a grant from the NFL and just went public. Since then, its stock is up more than 40%. The company sells a machine called Simoa for $175,000 to other biotechs, hospitals, and researchers.
And for the first time in history, we're able to see brain health in blood, and that's a major breakthrough, and that's leading to less invasive testing, and we've already been able to see evidence of concussions, and there's the beginning evidence of being able to see the accumulated effect of concussions.
Quanterix is also trying to detect Alzheimer's disease, multiple sclerosis, and ALS. Rosovsky says he thinks diagnosing concussions will be easier than diagnosing CTE.
Diagnosing CT in the living probably is a couple years away. We're real excited to see the progress, but reducing some of that work into actual tests in a laboratory takes time. There's regulatory approvals. There's a lot of red tape that you have to go through.
Also in this race to diagnose CTE in the blood are Athlon Medical and Exosome Sciences. And New York's Mount Sinai Hospital is scanning for the disease in the living. But it's just one step in a series of questions for those with serious head trauma. There's still no cure for CTE.
Even if we had a great idea for a treatment, there's no way to test whether it's effective or not. So that's the enormous advance that we'll get if we can develop a biomarker for this disease.
In Boston, Ann Mostu, Bloomberg News.
Wine is a $300 billion global industry where one person's opinion can make fortunes or break them. That's because of this man, Robert Parker, and his newsletter, The Wine Advocate. For 3 decades, he dominated as the world's most influential wine critic. Now Parker's protege is building an empire of his own. Antonio Galloni runs Venice. Antonio, tell me, what are you trying to build at Venice?
Well, at Venice, we started with the idea in 2013 of building a world-class platform. We have a database of about 250,000 professionally written reviews. On Delectable, we have 7 million user reviews. Through Delectable, we also have a partnership with Whole Foods and several other partnerships that we can't announce just yet. And when you put that all together, what we have is something that no other company in our space can even come close to.
Do you think of yourself as the next Parker?
Not at all.
Why?
Because Steve Jobs said you can't live your life trying to be somebody else. So he's one of my biggest influences, and I've never wanted to be a replica of somebody else because a replica is never as good as the original. Bob is a genius, fantastic, one of a kind. We're going to be something completely different, and I have no desire to be some version of somebody else.
Different in what way?
Every decision that I've made at this company is completely anathemic to what Bob did with his company. I want our writers to be partners. All of my senior people are locked into the company. They all have equity or they have a path to equity based on business results. That's something that we never had at Parker. Our benefits are world-class, and everything that we've done at Venice is completely different from that model. When Steve Tanzer, who is the most experienced active wine critic in America, wants to work with us, that says something. When Alessandro Masnaghetti, who's the best cartographer of vineyards, wants to work with us, that says something. When Neil Martin, who's a superstar wine critic with enormous experience in Bordeaux and Burgundy and the former lead critic at The Advocate, wants to come and be part of our team, that says something.
You make it sound like The Wine Advocate was a disaster as a company and a miserable experience as an employee.
No, it was great because I got to work with Bob Parker when he was at his prime, you know, and Bob was like a second father to me, and we talked on the phone all the time, and he gave me great advice.
Can anyone's palate dominate the wine criticism business the way Parker's did? And should anyone's palate dominate it the way his did?
I just think the world is very different today. You know, it's just a totally different world. It's probably not healthy to have a single person dominating the world.
It's not even wine criticism, it's the wine industry.
Yeah, that's probably not the healthiest thing in the world. But I think that there's just such an opportunity right now with social media and technology to reach such a massive number of people that I think it's possible that 1 or 2 people will actually have more influence than Bob Parker did, because they will, again, this goes back to your first question, not trying to be a version of somebody else. You see this in sports all the time. It's like, oh, well, nobody will ever beat this record. And then somebody comes along, you know, it's like tennis, Pete Sampras. Nobody's ever going to win as many Grand Slams. Now you have 2 guys who are ahead of that and 1 knocking on the door. And so I think a lot like that.
You're a former investment banker. How does that inform and influence what you're doing and what you've done?
My generation has had to deal with a lot more challenges. That's why I think we're actually much better poised for the future. My first job in finance, the first thing that happened was long-term capital, 1998. Then the tech bubble melted down. Then there was a mutual fund trading scandal. You know, that was all like within about 5 or 6 years. And these are the things that I had to deal with as a young executive. My peers who were 20 years older didn't know how to manage in crisis. They'd only seen Black Monday. They'd just been in a big bull market. It's very different. So I'm very lucky. People of my generation or a little bit younger have actually had to deal with a lot more crises. I think that's actually good for learning how to cope with challenges in business.
From the outside, it kind of looks like you're trying to demolish the house that Parker built, right? You left The Wine Advocate.
Yeah.
You merged with one of his chief rivals.
Yeah.
And you just hired his successor, Neil Martin.
Mm-hmm.
So are you?
I think what that says is that all the best people want to work at our company. And that's really what we strive to create starting in 2013. We wanted to create a world-class company that would attract the best-in-class talent, and not just on the content side, on the technology side, on the digital side, our office, and at every level, what we're trying to, we only hire superstars, and we're looking for those superstars.
In the world of professional wrestling, there's something called a swerve.
Hulk Hogan has betrayed WCW!
Some examples. These tag team partners are called babyfaces, or the good guys. Then one of them swerves when he super kicks his tag team partner in the head, quickly assuming the role of the bad guy, or what the wrestling world calls the heel.
Are you kidding? What a despicable act that was!
Or a match is almost lost when, what's that? The superstar wrestler appears out of nowhere sprinting down the aisle to save the match.
That's the Warriors music! It's the Ultimate Warrior!
That's a swerve. So it should go as no surprise that World Wrestling Entertainment, known as the WWE, the most popular brand of sports entertainment in the world, is prepared for any swerves that come their way. So here's the story of how the WWE learned to see the swerve coming. So I spoke to Bloomberg reporters Felix Gillette.
I'm a writer for Bloomberg News for the global business team.
And Kim Basine.
And I'm the U.S. luxury reporter at Bloomberg.
To find out exactly how the WWE is positioning itself for an all-out global invasion, which starts with a massive change to their lucrative pay-per-view model.
WWE basically pioneered the pay-per-view model on cable. I remember as a kid, when the pay-per-view events came up, all of our friends would scramble around and try and get one of the parents to pay for it.
But in 2014, they took a huge risk.
They saw a little bit sooner than some of the other entertainment brands that where this whole thing was moving was away from cable and satellite television and towards on-demand streaming video apps. They made this risky decision, in essence, cannibalizing that pay-per-view model, which they had essentially built.
And after some early turbulence, it's working. Roughly 1.5 million people are paying $9.99 a month for the WWE app, making it the 5th most popular streaming OTT service. This adapt-or-die approach is in the WWE's DNA. Over the past 30 years, the company always seems to think 2 steps ahead. In the early 90s,
WWE was at its most threatened when Ted Turner took them on with WCW,
which stands for World Championship Wrestling. And back then, the WCW was winning the ratings war. So in order to compete with them,
WWE had changed its product from a family-friendly kind of cartoonish style to this really raw. That's why they called their show Raw. It was this raw style of wrestling.
With violent, outrageous, reality-inspired plot lines and aggressive personas.
From a 16-foot ladder!
And they won that fight against Ted Turner. And they bought WCW.
The early 2000s ushered in an era of testosterone-driven programming aimed at the red-blooded American male.
Bra and panties matches, and people smash each other over their head with like barbed wire bats and things like that.
Until 2015, when WWE fans started a hashtag Give Divas a Chance. Since then, WWE has hired 40 more female wrestlers, and that growing cast of female characters was part of a much larger plan.
They started to try to appeal to a broader set of people.
Let's attract more female fans. And after we've attracted more female fans, let's attract more international fans. They're broadening their base, and they're doing that in large part to make it more advertising friendly.
And not just friendly to advertisers.
They're trying to build up their fan base in China. They're trying to build up their fan base in Europe. They, already have a pretty good fan base in India.
India is a place where they already have an established wrestling culture.
Because of the gigantic Indian wrestler, the Great Khali. But there's still a lot of work to do. While the WWE set a revenue record in 2017, only 30% of it is coming from an overseas audience. And there's one person whose responsibility is to grow that number.
The buck eventually stops at Vince McMahon, no matter what's happening within WWE.
Yeah, he's a very controlling guy, and it's a very, very, very tightly scripted company.
And that goes all the way down the board to the big stars' entrance music. And their outfits and things like that.
So with a CEO like McMahon always planning 2 moves ahead and an aggressive push into multiple international markets, a big issue is money.
It's hard to do all those things simultaneously without committing a huge amount of capital to it.
And that's where the WWE becomes an attractive company for buyers.
Potentially, one thing that could happen with WWE is they could benefit by being acquired by a bigger technology or telecom company, an Amazon or Facebook or a 21st Century Fox.
So with a market cap of $2.8 billion, the advantage of owning 100% of their own content, and a rapid consolidation spreading throughout the entertainment industry, it looks like the WWE is well positioned, even if there are swerves.
Thank you very much for coming here.
Thanks for having me.
I've always been relieved ever since you were appointed, because at least until your appointment, I seem to have the most unpronounceable name. But now, so we will keep it as Dara and John. This conference is called The Year Ahead, but in your case, you are close to 6 months into the job. And I wondered what you saw in terms of the year ahead at Uber as your biggest challenge. What's the thing that you think about most when it comes to 2018?
We definitely have our share of challenges at Uber. And for me, where I want to get Uber to the year ahead is a year of normalcy. 2017 was, I think, will go down as one of the most difficult years for any company out there. And I have to give credit to the Uber team and the employees there. It is a group of true believers who believe in our mission, who believe in mobility as a service being available to consumers everywhere at a reasonable cost. And what my job in 2018 is to get rid of the distractions and get the company back to business, get the company back to normalcy. There's a lot that we've done in the past 6 months as far as bringing in new investors, driving a new culture and norms where doing the right thing, period, comes first, bringing a new management team, et cetera. There's a lot that we've gotten done, but This is a company that knows how to execute. This is a service. Mobility as a service is something that's universal, that's needed in the world. And I just want to get back to doing business.
It's quite interesting. You said true believers.
Yeah.
Normally, true believers are the last possible people where you're able to change a culture. Can you explain a bit about that?
Well, I think that they understand that mobility as a service, bringing the cost of transportation down, making transportation services available to anyone and everyone on a local basis, and partnering with cities to be a solution to traffic, to pollution, et cetera. That is a mission that they all believe in. And I think that they, having seen what happened in 2017, to some extent the crisis, the enormous crisis that the company has gone through, is a benefit because everybody at the company knows now that we need to change, that we need to break with the past as far as the way the company was run. We need to go from growth at any cost to responsible growth and growth in partnership with other players out there. That's clear, but now I've got to kind of get the company down to the normalcy of execution of building great technology, and I think we're going to get there. It's still some tough sledding early on, but I absolutely think we're going to get there.
When you talk about execution, is profits one of the things you want to get? I think you lost $4 billion last year.
Well, profits,
peanuts by the standards of...
Profits will help. So at some point, we absolutely have to become profitable, and that's part of the plan.
Do you have a kind of goal for that? Do you think you should be profitable by 2022 or by 2020?
I think that we'll be profitable before 2022. This is the business itself.
Do you want to come back a bit closer, 2020?
Yeah, listen, it's not going to, I don't want to name a specific year, but this is a business that the core business, the ride-sharing business, can be profitable within 3 years. We will continue to make very aggressive investments in building out autonomy because we think that's a terrific opportunity for building out new technologies such as Uber Elevate, where near-term profitability is not a goal, but long-term growth is. So we will look to balance near-term profitability, but as a company, we will always be a company that makes big, bold bets and takes big risks.
To what extent, though, do you think that drive to become profitable fights against a little bit of this culture change? If you want to make, you talked about making money, but not at all costs. Do those two things?
Well, I don't think that profitability and culture are their issue. It's the company in the past was willing to make trade-offs as it related to how it did business, and I think was guilty of hubris, was guilty of thinking that they knew better than others, and I think that what we know now clearly is that breakneck growth can hide cultural issues, that there are no excuses for not doing the right thing, and that you do have to make trade-offs. And as a management team, we're specifically talking about those trade-offs that you have to make. We have to be a little more patient sometimes because working with governments, regulators, et cetera, sometimes takes longer, but in the end, you build a more lasting business. And so maybe what we went through was necessary, but we're here. We can control our actions from this moment onwards, and I think everyone at Uber from this moment onwards wants to build a great company, not only in terms of growth, but in terms of the kind of company anyone would want to work at.
Can I ask you one thing which you have got a sort of hangover from last year, which is all the regulatory problems, and particularly all the cases against you? I think there are 6 criminal probes or whatever going on.
The lawyers are lining up outside the door.
Which one do you sort of think? Which one do you fear most? I suppose out of these different things.
Listen, I think that all of them are serious issues, and my response is that we're going to be transparent and we're going to take responsibility for our actions in the past. I do think that there are certain circumstances where there was smoke but no fire, and I think as a company we have to defend ourselves and work within kind of the appropriate frameworks. And my goal is just to get beyond this stuff.
Some of these things like pricing policies, surely they go right to the heart of what Uber is, or am I wrong about that?
Yeah, I think they do, but I think that there's a way of being smart but transparent at the same time, and that's where we've got to take the company.
Take me through governments. When you talk to governments privately, do they talk any differently than they do publicly?
Governments?
Yes, governments.
I think that they are honestly a bit relieved with how we are engaging with them, because I think that the engagement is now real. I think they feel like we're out there, we're genuine because we've learned our lessons of the past, and I do think that we can take, for example, the data that we have in terms of traffic and in terms of movement of our drivers and riders, and we can use that data to partner up with cities in order to solve congestion issues, because congestion doesn't help anyone. It wastes enormous amounts of time for consumers. It hurts the environment. And I think that we are aligned with cities, for example, to partner with them in a fundamental way to solve these problems. And I do think that when these are conversations that a number of regulators and cities have wanted to have with us for many years, and I think we are really engaging with them at a depth that I think is going to create a real win-win going forward.
Do you think you were too confrontational on this before?
Yeah, I do. I think that the company was pushing growth. And listen, any innovator, to some extent, the innovation is about questioning past kind of present practices. It's about breaking things, the Facebook breaking things. We just went a step and a half too far. And what I want to keep, hopefully, is the best of both worlds, which is this spirit of innovation, the spirit of can-do, et cetera, but the responsibility of partnership. We don't know better than you. We're actually going to work with you, of actually having dialogue and respect for our city partners, for regulators, and then continuing to take risks and continuing to do daring things. And I think we can accomplish that.
Imagine this audience here is a collection of mayors or a collection of city officials, and you want to depict, this is the Year Ahead conference, depict what the years ahead in this thing are going to be like. How far is driverless cars going to go? You talked just a few days ago about the idea of there being flying cars in 10 years' time. Can you just give a description of what you think transport is going to look like?
Well, I think that we think there are three keys to transport and where the industry is going: autonomous, electric, and shared. And I think all three are necessary in order to get to the next level of city planning, et cetera. There are many cities where up to a fifth of the space taken in these cities is taken by parking and storing these cars. And so I do think that you need autonomous, you need electric, and you need shared. And I do think it's going to take some time. True autonomy for every single use case is some ways away. What we bring to bear is our developing autonomy, and we will have autonomous cars on the road, I believe, within the next 18 months, not as a kind of a test case, but as a real case out there. And over a period of time, we're going to bring autonomous transportation and feather it in with the non-autonomous transportation with drivers.
What does feathering in mean?
Feathering in
to a layman like
feathering
me?
Crashing. Yeah, feathering in means if you're, for example, in Phoenix, and you make a request to go from A to B, which is what you do with Uber, there will be 95% of cases where we may not have everything mapped perfectly, or the weather may not be the right weather, or there may be an accident on the road, or you may not have 2 or 3 ways of getting from A to B, where you may say, you know what, that's not an autonomous use case. We're going to send a driver to pick that person up. For 5% of cases, everything is going to fall into place. And we will send an autonomous car. The user will be able to pick, do you want, there's an autonomous car, yes or no? And we'll be able to service that A for B. That 5% is going to go to 10 and 15 and 20 as our computers and our algorithms learn more and more about what it takes to drive in a city in a real life situation. And every minute of every day, that driver, that computer is going to get better and know Phoenix better and better and better. And in 5 years, we'll have the perfect driver in Phoenix. We will have to retrain that driver in every single city. We're going to have to build out 3D maps of these cities. And it will take time, but over a period of time, you essentially have a driver who becomes the perfect driver. It'll take 10 to 15 years, but that's the feathering in that I'm talking about.
And will a child born today, will they ever need to learn how to drive?
A child born today? No, I don't think so.
So within sort of 20 years from now, we will...
I don't think so. Listen, I hear some groans.
And also,
I heard a couple of groans. 1.3 million people die from car crashes every year. 1.3 million people die from car crashes every year. That doesn't count an estimated 20 to 50 million people that are injured. Okay, this is actually a public safety issue. If you look at cars, 96% of cars, 96% of time, cars are sitting there not being used. It is a huge amount of pollution that's caused by these cars being in the road, and a huge amount of wasted time. So the safety is there. Electrification is absolutely key, and sharing these platforms is going to allow us to be much safer and also put our assets where they add value.
But it's quite interesting because when you first came in, I remember you sounding somewhat more skeptical about self-driving cars. You've been converted. Is that a?
The choir has spoken, and I'm listening. It's pretty exciting technology out there. But again, it will be a hybrid technology for some period of time.
What about flying cars? That came as a slight surprise.
Yes, that's a great project that we're working on. It's called Uber Elevate. And it is actually about battery technology.
It would have helped a lot of people here.
I know. I wish that I was available. We'll launch it here if we can. But battery technology is allowing us to have multiple rotors on planes, or helicopters, if you want to call them that. These rotors that are much smaller will be much quieter than helicopters are. Much quieter, much safer. If you add sharing into the equation, you can actually get the economics of going from A to B. We think within 5 to 7 years to a place where normal people would think about taking these flying cars. That'll be the beginning, and then it's about scaling. And we're working with a number of partners right now.
Do you think the regulation on flying cars? I've heard some proponents of it argue that it might be easier than it has been on driverless cars, because driverless cars, you have to deal with existing roads, existing everything. Flying cars, essentially, you're going into unconquered space.
I think that mayors that are forward-thinking understand that traffic and pollution are a real issue, and I think flying cars can be a significant solution to traffic issues in cities. And these cars, to start with, they're going to be very specific. They'll be kind of highways in the air. There'll be very specific routes that these flying cars go on. They're not going to be able to take you to your backyard and land in your backyard. There'll be these skyports. So there'll be very specific routes that you go on. And I think if you build a regulatory framework that has that kind of structure around it, I think you get to a better solve.
Can I drag you back somewhat reluctantly back to the real world? But you have Rajiv Misra, who came in with you from SoftBank.
Yes.
He's going to become a director. Last week, he said that Uber should focus on repairing its market share in the US and on key European markets rather than going to new ones. Do you agree with that? Is that the way you look at Uber?
I think one of the fundamental strengths of Uber is the global scope that we have. This is
you
brand.
had that motto, everywhere. What's it? Everywhere for everyone.
Yeah, everywhere for everyone.
Do you want to make it some places for some people?
No, we like the everywhere for everyone. It's much sexier than some places for some people.
That's telling me.
Just not interesting. I do think seriously though the global scope that our company brings is important. Our being able to build technology that we can amortize essentially everywhere in the world is hard, but it is part of the fundamental value that we introduce. So I would look at Uber very much as a global brand. That said, we're going to look at all opportunities, but at this point, we are leaning forward. In 2018, for us, is going to be very much a lean forward year for the company.
But without, I'm not trying to create new boardroom tension at Uber, but that would appear that SoftBank is keener on a more limited idea, whilst you're keener on everywhere for everyone.
Well, listen, SoftBank is a very important shareholder. They're our largest shareholder, and many of our shareholders have opinions over what's the right thing to do. Ultimately, the governance of the company is going to be at the board, and we'll have those discussions at the board, and we'll set our long-term strategy, and then execute on it.
One of the things which Uber played, perhaps not very fortunately, a role in was the whole sexual harassment questions and everything to do with that. I suppose one very obvious question, do you think that you have solved that part of the culture? But secondly, do you think that this is a real revolution and it's going to stick?
I think that what was happening at Uber was serious, and I think that while what Uber went through was difficult, I think the Susan Fowler blog was probably one of the best things that happened for Uber, and it certainly started a movement that's an incredibly important movement of the company. I'd be reticent to say that it's solved.
Yeah.
But it's not an endemic issue within the culture of the company, and I think the company has learned, and I think the company took very harsh and appropriate steps to make sure that kind of behavior is absolutely clear, that kind of behavior is not accepted in any way, shape, or form of the company, regardless of where you are, regardless of if you're a great performer or not. So I think we're at the right place for Uber as a company, but I think in general, we're not where we need to be in terms of women in senior positions, making sure that we're welcoming of women in technology, and we help women really build their careers within our company. There's a great kind of bottoms-up energy there, but we're not where we need to be, and we have a lot of work ahead of us.
On the issue of, you talked about the top performers, is that looking back, and also I suppose looking forward for many of the people in this room, because there are a lot of people's businesses which have been affected by this. If you had to give lessons to other people who are now looking at this issue, perhaps more seriously than they have done before, is the really bad issue, and I suppose I'm thinking in some ways about the media industry in this, is that giving top performers more room for maneuver or whatever than people, or more discretion than people thought? Is that top performers need to be treated the same as everybody else?
I think they absolutely need to be held accountable. One of the really valuable lessons that I got early in my life was actually through Jack Welch, and he said, it's very tempting to allow top performers to misbehave in any way, but for me, he was talking about being aligned with the CEO. Sometimes you allow top performers. The tendency is, well, let them get away with some kind of behavior that is not the right behavior because they're so good. And what Jack told me very early on is that it's the top performers who are problematic culturally that are the most dangerous because they have followership within the company because people look up to them. So he's like the dumb person who is bad culturally. He's not the problem because everyone says, well, that's a dumb person, so who cares? It's the smart person who has followership, so it is incredibly important for the top performers to actually be held to account more radically than anyone else because they're the ones who have followership at the company, and they have to set the example. So for me personally, that has absolutely guided how I've managed. Expedia was a company that had, excellent cultural values, and one of the first things we did at Uber was to go out and reset our cultural values, and we call them norms because to me, it's not just these values that you put on the wall and kind of people stare at and it's all nice. It's about behavior. And we set out to change behavior at Uber, and I think that the company was thirsting for it, and we are starting on a path, and I believe it's going to be a positive path.
An inevitable question, I hope you won't regard it as a cheap shot, but you talked about smart people who have followers throughout a company. I mean, Travis would seem to be the epitome of that sort of figure. Is that, do you think of him as being in that category of people that Jack Welch was talking about?
I think, listen, Travis was the CEO of the company, and he had incredible followership, and he was held to account, right? I mean, he's no longer the CEO of the company, and he's a board member. He's a big investor, and so he's absolutely going to play a part on the board. But we've also been very clear as a company that we do have to make a break with the past, with how we behaved as a company, and to some extent with the new CEO being a very different kind of a CEO. So in the end, you have to be held accountable, and I think that Travis was held accountable, and at this point, he's a board member and a constructive one at that.
If you look around the world now, where do you see the next competitors to Uber? You've obviously got Lyft breathing down your neck.
Yes.
Where else do they come from?
Well, I think that as you move into a world of autonomy, the position of the car manufacturers, the position of, for example, Google, who's developing Waymo and Waymo autonomous technology, you're going to get a lot of players interested in this space. And a lot of people think about Uber and ride sharing as a significant enterprise, and it is. But the fact is that we account for less than 1% of miles driven on the road now. When autonomy comes in, that number over the next 10 years is going to be closer, I believe, to 15 to 20%. So because we're not yet a true alternative to car ownership, and I believe that as you bring autonomous and you bring the price of mobility down and make it available to everybody, everywhere, then we become a real alternative to car ownership, and that really opens up the market for us, but it also opens us up to many more competitors.
And is Google at the forefront of those competitors at the moment?
Google is one of many. I think that they've developed very strong autonomous technology, but what we think, which is exceptional, is having autonomous technology and the network under one roof, which allows us to use autonomous in a very practical way, nearer than you think.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser on Bloomberg Radio.
Live from the Bloomberg Interactive Brokers studio, streaming on YouTube. It is Tuesday, November 17, 2020, and it's all about the virus, in case you forgot. Investors remembering once again today, causing stocks to pull back from record highs as investors focus on what we've seen has been a surge in virus cases and a new lockdown, and we're seeing more measures as a result of that locking down our economy. So we're going to talk about that. So any of the optimism that we've seen in the last few weeks, it's kind of gone. So we'll talk about that over the next few hours. First up, though, let's get a check on that trading day. Here's Charlie Pellet. We're down, but we're off our lows, right?
It depends where we're checking, but yes, for the S&P, we're down. The Dow is down. Keep in mind, they were both at records yesterday, Carol. NASDAQ higher now. It's been fluctuating between gains and losses. Good afternoon, by the way. Happy Tuesday. Stocks pulling back from records as investors focus turns to the surge in virus cases, along with those new lockdown measures overshadowing optimism that COVID-19 vaccines will eventually end the pandemic. So right now, we've got the 10-year up 10.30 seconds, 10-year yield 0.87%. Gold down $3 the ounce, down about 0.2% at $18.85. Crude West Texas Intermediate down 0.6%, $41.10 the ounce. S&P edging lower. Pharmacy chains among the worst performers after Amazon unveiled a new push into prescription drugs. Amazon up 0.7%, but among some of the drug names, CVS Health Corp lower by 8.8%. Walgreens Boots Alliance lower now by just about 8.6%. And Rite Aid, you know the ticker RAD, it is down by 15.6%. So again, recapping here, equities mixed, S&P down 11, a drop there of 0.3%. I'm Charlie Pellet, that Carol Masters of Bloomberg Business Flash.
And that, Charlie Pellet, is what we call the Amazon effect. We've seen that before. All right, Charlie Pellet, thank you so much. You are listening to Bloomberg Business Week. Carol Masser in our Bloomberg Interactive Brokers studio. Do want to get right to the Business Week agenda. We've got with us Gina Martin-Adams, Chief Equity Strategist at Bloomberg Intelligence. She's on the phone from New Jersey. Also with us is our own Dave Wilson, Stocks Editor at Bloomberg News. He's on the remote access from New Jersey. So, Gina, interesting few weeks here, right? Rally, and even though we're seeing a little bit of a pullback in the equity markets, let's not forget, right? We saw the Dow with a new record yesterday. Where are we in this market cycle?
Yeah, I think we are experiencing yet another breakout, consistent with what appears to be a peaking in COVID rates once again. This happened back in April. It happened again in July. It's happening again, where even though we all get a little scared about the future of the economy, the reality is that COVID, at least on a daily change basis, peaked on the 13th for now. Not coincidentally, a few days later, stocks appear to have broken out in anticipation of improving case counts over the next couple of months. I think we're in for an interesting period over the next couple of weeks because we have surged so much since the post-election low. So you got to a point where about 90% of stocks in the S&P 500 are trading above their 200-day moving average. That doesn't happen too often. It's extremely strong participation. Not extremes in momentum yet, so that may allow the market to continue to kind of churn above former peak levels and sustain this breakout. But we have had such an extreme move. You've got to imagine that we will at least consolidate some of those gains at some point in the future, and maybe today's the start of that.
Hey, Gina, just one quick follow. I mean, I know you're watching the equity universe, but I also know you watch a lot of things when evaluating the financial markets and the equity markets specifically. But yesterday we talked a lot, and we've had this conversation where the equity markets, you might see one thing, but the bond market's telling you something else. And we certainly saw that, I think, when equity markets have rallied and the bond market is still kind of a little bit more steadier and not so enthusiastic, maybe in terms of the outlook. How does that factor into your outlook?
You know, I actually respectfully disagree. I think the equity market and the bond market are saying the exact same thing. The bond market yield curve spread has been widening since, for several months now, actually started widening before the equity market started rallying in March, has continued to widen. If you look at it in percentage terms, it's one of the biggest widenings in history. Just because rates are extremely low, we get this false sense of what the bond market signal is. But off of our low, the expansion in the yield curve is tremendous relative to the historical expansion at the start of recovery. Likewise, credit spreads are back to testing their levels back recorded in 2015. So credit spreads are confirming the equity rally. Even if you look at short-term credit spreads, incredibly tight. There's no evident risk in the bond market, in my opinion. I mean, the indicators that I watch that I think actually matter are very, very supportive for stocks. And as a matter of fact, we wrote about this yesterday because we do watch 4 different bond market measures as an indicator of stock market strength. And from my perspective, they're all very much confirming a brighter tone in stocks, even though rates are lower as mandated by Fed policy.
All right, that's fascinating. All right, Dave Wilson, come on in on what we're talking about and the trade specifically. What are you seeing specifically?
Well, I just want to kind of pick up where your discussion just left off because, we got the results today of Bank of America's monthly survey of fund managers, and a record percentage of the participants in that survey said they expect the yield curve to steepen. So, that's one piece of the puzzle. Another piece really kind of explains why it is that stocks have done so well in the midst of the coronavirus as much as anything. 91% of the participants, and this is a net figure, right, expect a stronger economy, and that's the highest reading in the survey since March 2002. Similar story with earnings. Net percentage, 84%, the highest since February 2002. So you've got a brighter outlook for the economy and for corporate profits and for what happens to bond yields from here. So when you put that all together, you can understand why people are looking ahead, liking what they're seeing, and being willing to step up and buy stocks. Though today, things have kind of stumbled a bit.
I do want to mention a headline crossing. President Donald Trump has ordered the Pentagon to accelerate a drawdown of U.S. troops in Afghanistan and Iraq to 25 2,500 in each nation as the president looks to deliver on his longtime pledge to exit from, quote, endless wars before he leaves the office in January. So we continue to see certainly moves by the current administration, the outgoing administration in the White House. Gina, when I think about that, though, and we've had stories on the Bloomberg that says, there might be things that President Trump and his team are going to be doing on the way out. What are you watching in terms of any kind of areas in particular that might impact the financial trade?
Yeah, I think that the most important thing to watch is what happens with fiscal policy. I mean, frankly, it's really difficult for stocks to price any sort of geopolitical maneuvering, modest changes in personnel. That kind of thing just doesn't tend to resonate with the equity market. But I do think that there is a lot of nervousness around national security as one key issue, and then, of course, fiscal policies. The fiscal policy is just the easy one, right?
Yeah, right.
It's pretty easy to suggest that if we do have spiking rates, we have problematic economic conditions that could emerge in the winter, and we might be left with an air pocket of no policy support, and that could certainly create a bit of stumble in the outlook. We're actually starting to see that embedded in analyst expectations to some degree. Analysts over the last couple of weeks have taken down their expectations for first half 2021 and pushed that growth into second half. And I think that reflects a lot of fear around the spiking cases and the lack of fiscal support. So I'd say watch the policymakers for a fiscal package as one of the biggest keys to come out of Washington over the next 3 to 6 months.
Yeah, I concur. I think we've heard that, and that makes an awful lot of sense. All right, Gina, thank you so much. Gina Martin-Adams, Chief Equity Strategist at Bloomberg Intelligence, joining us on the phone from New Jersey. Dave Wilson's going to be back with his chart and stock of the day a little bit later on. Of course, he is our stocks editor at Bloomberg News. I do want to get to the rest of the show because we've got quite a 4 hours coming up. We're going to check in on the virus with Dr. David Levy, CEO of the healthcare company EHE Health, see what he is seeing currently. We've also got 3 disruptive and innovative companies. The big kahuna is Amazon, doubling down into healthcare. So we're going to do a deep dive of our own into the great disruptor that is Amazon. Also, another disruptor, it's a member of this year's class of successful IPOs, featured in the magazine earlier this year, backed by tech billionaire Peter Thiel. Some call it the magic mushroom company. We're going to talk with the chairman, CEO, and co-founder of Compass Pathways. He'll be along. And then you've seen it a million times. We're talking about Spot the robotic dog from Boston Dynamics, all of their amazing robots. That company about to go from the lab out into the capitalistic world. So we'll get that story from our Business Week team. We're going to talk real estate as well and rescuing our troubled restaurant and bar space. John Taffer of Bar Rescue, he's going to be back with us a little bit later on. Quickly, I do want to do this bite of the day because this number really bothers me. It's 1/3. France's largest glacier, La Mer de Glace, has shrunk by about 1/3 since 1900. It's lost about 1.5 cubic kilometers of ice, or roughly 500,000 Olympic swimming pools. So it's just a reminder of what's going on in our climate, and that climate change is definitely having an impact. All right, Nancy Lyons, over to you.
Thanks, Carol. President Trump is moving to accelerate a drawdown of U.S. troops in Afghanistan and Iraq to 2,500 in each nation. It would deliver on his longtime pledge to exit from endless wars before he leaves office in January. The order would reduce troops from about 4,500 in Afghanistan and from about 3,000 in Iraq. This would happen less than a week before President-elect Joe Biden would take office. Well, President-elect Biden is pressing Congress to approve a $3.4 trillion stimulus plan to keep individuals and businesses afloat as we see another spike in coronavirus cases nationwide. Senate Majority Leader Mitch McConnell says Republicans are on board.
If Speaker Pelosi and Leader Schumer had not made the calculation of block it, that money could have been out the door many weeks ago. Instead, our Democratic colleagues have spent months, literally months, holding all of that urgent help hostage over unrelated left-wing wish list items.
The chief executive officers of Facebook and Twitter have been under the microscope today as they testified before the Senate Judiciary Committee. Senators renewed their accusations that the companies are failing in their roles as moderators of online speech. Twitter CEO Jack Dorsey says the platform flagged some 300,000 tweets as part of efforts to combat disinformation. Senator Lindsey Graham is denying that he urged a Republican elections official to toss mail-in ballots en masse in Georgia. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts from more than 120 countries.
All right, Nancy Lyons, thank you so much. Charlie Pellett joining me right now, right here on Bloomberg Business Week. Charlie, I'm just going to go a little rogue because I want to go back to that Bloomberg Business Week bite of the day. France's largest glacier, La Mer de Glacé,
That would be glacé. That is français.
has shrunk by about a third since 1900. A third. It's lost about 1.5 cubic kilometers, of ice, or roughly 500,000 Olympic swimming pools. It's just apparently heating up more than twice as fast as the rest of the world. I just needed to put that out there because Bloomberg New Economy Forum, they're going to talk about climate tomorrow. We're really seeing things change dramatically in our world in so many different ways. And I think that's an important thing.
And you're taking part in this forum. You've got a couple of panels coming up, correct?
I do. I'm going to talk about COVID and specifically how do we prevent this from happening again? What have we learned? How do we get smarter going forward? The Moderna CEO is going to be on with us. Also, Dr. Wu of China. He has been on the ground as still cases break out there in China specifically. And he's really kind of their top infectious epidemiologist over in China. Some people have described him as the Dr. Fauci of China. So it'll be an interesting conversation. And it happens, Charlie, as you and I are watching these headlines on the terminal.
Yeah, indeed. 2 million cases out of France since the start of the pandemic, raising the question, what are they doing at the Master household for Thanksgiving?
It's just us, the three of us plus Scout.
Yep, and likewise, too, at the Pellet household. Just the three of us. I was going to go visit my sister in Massachusetts. Good luck with that, Charlie. And the ironic thing there, the rental car company called me to cancel to ask politely if I would be willing to give up my reservation on Thanksgiving Day. So
because there's so much demand?
No, because they don't want to be opened on Thanksgiving, and because there is so little demand.
Yeah, well, that's actually good so that their workers can be home. But that is interesting. Listen, we're increasingly hearing that, and people, that as we move inside, larger crowds, try not to have that happen because we know, Charlie, we're going to see the cases move up.
Absolutely.
All right, Charlie Pellet, thank you so much. You're listening to Bloomberg Business Week right here on Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. S&P remains lower. The Dow as well, pulling back from records. NASDAQ on the plus side now. NASDAQ up 18, a gain there of just about 0.1%. Stocks easing off records with the coronavirus in sight. The S&P down 5, a drop of 0.1%. The Dow is slumping 89 points, lower by 0.3%. Should point out that NASDAQ has been swinging between gains and losses. NASDAQ 100 index up today by 0.1%. Russell 2000 up by 0.5%. 10-year up 9/32, 10-year yield 0.87%. Gold now down 0.2%, 18.85 the ounce. And West Texas Intermediate crude down 2 cents. Little change there, 41.31 a barrel. I'm Charlie Pellet. That is the Bloomberg Business Flash.
All right, Charlie, thank you so much. You're listening to Bloomberg Business Week on this Tuesday. I'm Carol Masser. So we talked about New York City's COVID-19 positive test rate over a 7-day period staying below a threshold that would trigger a shutdown of schools. That's good. We did see groups representing U.S. doctors, nurses, and hospitals urging President Trump to share information about the administration's coronavirus response with President-elect Joe Biden and his transition team. We had Germany warning Angela Merkel that Germany remains very serious, but there is some optimism that an economic recovery will gather pace once the pandemic is brought under control. There's a lot going on. Global cases, meantime, they are topping 55.1 million when it comes to COVID-19 deaths, 1.33 million. Back with us for our daily virus update, Dr. David Levy. He's CEO of the healthcare company EHE Health, and he joins us on the phone in New York City. Dr. Levy, nice to have you back with us. How are things going? What are you seeing when it comes to the virus?
Thanks so much, Carol. It's great to be back. Well, you know, we basically have around the rest of the country an explosion of cases, and they're creeping up in New York. We have some great silver linings on the horizon with respect to both vaccines and the advent of antibody treatment, monoclonal antibody treatment. But in the meantime, from now until the end of the holidays in December, we've got to keep focused on what I call Public Health 101. Masks, social distancing, testing, positive contact tracing, and positive people quarantine. It's as basic and as simple as that, and it's the thing that's right at our hands to be able to do effectively.
Yeah, I mean, listen, you know, we all know what it is, right? Social distancing and wearing masks. It gets tougher, though. I think it's fair to say that once everybody has to be inside, you can't be outside like you were maybe over the summer, correct? And I also do think that there's something now that we're, 8 months into this, there's pandemic fatigue. And I think there are people who, you know, left brain, right brain. I understand this is what we need to do, but I'm exhausted. I'm tired of this.
Yeah, so we're all exhausted. You know, we see it at our own company. We see it at our clients' companies. We see it everywhere.
Yeah.
And all I can tell you, it's the role of leadership to get out there and to keep on pushing people to the finish line, pushing them to the finish line. We will get to the end of this. I am confident of that. This is going to start looking much, much better with the turn of the year. And we just have to keep on strong right up to the end. And there's no other answer for it, frankly, at the moment.
Well, and it's interesting that you say that, too, at a time when I just read a headline kind of leading into you about doctors, nurses, hospitals urging the current administration to share information about the White House's coronavirus response with President-elect Joe Biden's transition team. How do you, as someone who understands this virus in the medical community, understand the frontline workers who are constantly putting their lives at risk and watching these cases that are, you know, increasing around the country, around the world, how important is it that this transition, just when it comes to COVID-19, be smart, go well, and that there are no laps, right? That we just kind of are as seamless as possible?
Well, just to give people perspective on what we're looking at with respect to the advent of vaccines and antibodies, you're talking about two specific treatments, a vaccine which creates active immunity, which have focused just on the vulnerable population. And when we're looking at 90 to 95% efficacy, you're talking about bringing down the entire lethality of this epidemic just by focusing on the vulnerable population to somewhere not that much different than generalized influenza. I mean, and that's without herd immunity. It's just focusing on the vulnerable people. The same thing with monoclonal antibodies. This is an antiviral therapy which has about a 70% reduction in admission rates for folks who are at risk, namely vulnerable populations. That can bring the case fatality, the lethality of this epidemic down significantly to be just a little bit above 1.5 times a general flu epidemic, or a little bit higher. So the idea of getting these two new therapies, or these two new strategies to vulnerable populations, relates to two things. One is obviously supply, then distribution and access. And if we don't have all of that seamlessly coordinated, we're going to miss an enormous opportunity to significantly drop fatality. That, by the way, is without getting into the whole distribution of and the ramping up of testing, masks, and PPE, which is basically back to the public health 101 issues. But boy, with these two new therapies coming down the pike, if we are not seamlessly coordinated, we can lose a major opportunity to have some serious impact, Carol.
If this was a baseball game, where are we in terms of innings?
7.
Oh, that's positive.
Yeah. Well, I'm optimistic. I mean,
there could be extra innings, though, and I'm not trying to be funny here, but
we're going to have a rough 7th and 8th.
Okay.
But and I say that to the end of December. But I really believe that as these things come online, we're going to see really a significant change. And honestly, I don't see how we can start enforcing some of this masking more seriously across the country as well.
Should we have a mandate? Should we have a mandate come down from the federal government?
There is no downside, in my view, to a mask mandate. I mean, this is not rocket science. This is proven. You can see the numbers. Some people project perhaps 80, 90% reduction in spread just by wearing masks. This should be a no-brainer. It's absolutely, and this is not economic shutdown. Right. This is basically just putting on a mask. I think it's a patriotic thing to do, quite candidly.
Yeah, no, I get it. It's funny, too, and we've all had conversations at home, at work, about how it's just become kind of so normal for so many of us. And I think if you've been in one of these major cities where you've seen the impact of it, it's like putting on a seatbelt when you get into a car.
It's interesting. In New York, it's not an issue. Everybody wears a mask. Yeah. Everybody gets it. And frankly, I think it's because of the horrific spring we had. And, 1 in 350 New Yorkers died of COVID. People get that. They understand that. It was over 10 times that of 9/11. So we wear masks. No problem. We get it.
All right, sit tight for a second, Dr. Levy, because I want to come back to you and talk about preventive care. I know this is something you and I have discussed before, because this is really important at this time. It's always important, but in particular when it's easy for people to kind of say, I don't want to go to the doctors, they can't forget. We're going to come back with Dr. David Levy, CEO of EHE Health, joining us on the phone in New York City. You're listening to Bloomberg Business Week, and this is Bloomberg Radio.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 106.1. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
You are listening to Bloomberg Business Week on this Tuesday, and coming up, we're going to continue with Dr. David Levy. He's CEO at EHE Health. We're talking about the COVID surge that we're seeing certainly around the country and what needs to be done, but we're also going to dig a little bit deeper into preventive health, why we need to kind of take care of ourselves, those routine things, certainly during this environment. All right, first up, though, let's get back to your top business stories. Another check on the trading day with Charlie Pellet.
All right, thank you very much, Carol Massar. Fed Chair Jay Powell says the U.S. economic recovery is likely to continue, quote, at a solid pace, yet risks losing momentum as the virus surges, adding that it's too soon to close the Fed's emergency lending facilities. U.S. stocks trading mixed right now. We've got both the Dow and the S&P retreating from yesterday's records as investor focus turns to the surge in virus cases and new lockdown measures overshadowing optimism that COVID-19 vaccines will eventually end the pandemic. Here's where we stand. The S&P 500 index lower, little change, down less than 0.2% right now, down 6 points at 3620. The Dow is down 101 points, down 0.3%, and NASDAQ up 15. That is a gain of 0.1%. 10-year up 10/30 seconds, 10-year yield 0.87%. Gold down 0.1%, 18.86 the ounce, and West Texas Intermediate crude up 0.5%, 41.53 a barrel. Moderna has announced a supply agreement with the government of the United Kingdom to supply its COVID-19 vaccine candidate beginning in March 2021 if it's approved for use by UK regulatory authorities. Moderna shares, they're down now by 5%. Rival Pfizer up 1.8%, and BioNTech also pronounced down by 4.5%. Dr. Amish Adalia is senior scholar at Johns Hopkins Center for Health Security, and he says the news yesterday from Moderna about its effectiveness is definitely a game changer.
I do think that this is going to end up being probably one of the first generation vaccines that is the vaccine of choice, because everybody was excited about the Pfizer efficacy numbers, but we weren't so excited about the fact that it needed to be stored at -70, -80 degrees centigrade. The Moderna vaccine, because it can be stored at normal, achievable temperatures that don't pose a major logistical challenge, does make this prospect a little bit easier. It's still going to be daunting, but it is going to be something that is much less complicated when you don't have to think about freezer farms and trying to make sure that the cold chain remains intact.
And again, Moderna is down now by 5%. The Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Recapping, 10-year yield 0.87%, stocks mixed, S&P lower, retreating from a record, down 8 now, down 0.2%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. I want to get right back to our guest, Dr. David Levy. He's Chief Executive Officer of EHE Health. He is on the phone from New York City. EHE is a healthcare provider, and want to get back to, we've been talking about the virus. I just want to talk to you a little bit more about COVID-19, Dr. Levy, because I did feel like, you gave us a little bit of a timeline, and not a little bit, you gave us, saying we're in the 7th inning, if this was a baseball game, but you said the 7th and 8th innings are going to be pretty tough. But the difference between now and, let's say, a few months ago, perhaps, or at the beginning of this pandemic, is that the vaccine developments, that we've made progress?
Yeah, for sure. The vaccine, as well as the new antiviral medications, the monoclonal and polyclonal antibodies, one of which was approved last week. So that's been basically a story that hasn't been told enough, but it's going to be a very significant impact, we believe.
Why is that so important, in addition to the vaccines?
Well, to have a drug that you can give when you're just mildly ill or moderately ill, it's kind of like an antibiotic when you show up to the when you show up to the hospital with a bacterial pneumonia, you get a shot of penicillin, and you don't have to get admitted to the hospital. Well, this is kind of like the same thing. It's an infusion, but it really takes down the chance of being admitted with a serious illness. And frankly, that's exactly what President Trump got from Regeneron, and exactly what Governor Christie got from Lilly. So these medications are highly effective, and when targeted at vulnerable populations, can have a very significant impact.
And you have to do it early, correct?
Yeah, mild or moderate symptoms in vulnerable populations. The problem with that strategy isn't actually its effectiveness, it's supply and distribution. And we're actually probably going to see in the next few weeks and months, we'll see infusion centers pop up all over the place.
Right, exactly. Well, that begs to that bigger question of the supply chain, whether it's the vaccine or whether it's these antiviral treatments, right? These are not things, I know the vaccine makers, the big pharma companies, I mean, they certainly have been working towards this. They've even started manufacturing it. But this is going to be huge, the logistical side of manufacturing it and then getting it out, the vaccine or even these antiviral treatments.
Exactly, and that's back to the issue of why you need such close coordination between the outgoing and the incoming administrations. I mean, this thing has to be seamlessly coordinated. Otherwise, people will die, no question.
All right. One thing I did want to ask you, too, is what are you seeing when it comes to people coming in and doing some of those preventive routine treatments? Have you seen an increase in people feeling more comfortable about coming back to the doctor's office?
Yeah, we provide preventive health services around the country.
Right.
And for large employers and for their employees and spouses and families. And we actually were caught by surprise how engaged people were once we reopened after the lockdown, because people have begun to understand that that much of the comorbid conditions affiliated with COVID-19 can kill you. And those are all lifestyle illnesses, overweight, high blood pressure, diabetes, and the like. Getting those things under control has meaningful impact in this pandemic. And so we strongly believe that that's a great reason to get back in. People are figuring out that they're not going to get COVID at their local hospital or their well-managed doctor's office because appropriate precautions are being taken. And reducing comorbidities is a hugely advantageous thing to do, and it's something that everybody can do today without any big dispute on whether there's going to be a good outcome.
Dr. Levy,
so that's a great thing to do.
I just want to, because we just only have about 40 seconds left here, I just want to follow on that. I mean, what is one thing that we could change or mandate? Because we do know that, you know, taking care of your health, wellness, weight, these are things that really impact your outcome in any health situation. How do we change that? How do we change the trajectory and the trend line? Just quickly.
Well, in the end, I mean, you can't force people to do what they don't want to do. I think that frankly, educating the public about how important lifestyle is probably the most important thing. You know, I call it, you know, COVID compresses time. You're overweight, you're diabetic, you're hypertensive. You know, you may not have 10 or 15 or 20 years anymore to hang around and wait till those things impact your end organs, your organs. Right. You know, this could hit you right away. So I think the most important thing is education and awareness and getting people to know and to understand that they can do something about it.
Yeah, it's a big issue, no doubt about it, especially when you look at things like the diabetes numbers in the United States. Dr. Levy, thank you so much. Nice to check in with you. Dr. David Levy, CEO of EHE Health, joining us on the phone in New York City. Do you want to mention a headline that just crossed the Bloomberg? Robinhood is said to seek advisors for a potential initial public offering next year. So again, Robinhood, one of the big stories of 2020, and now looking at 2021, potentially for an IPO. Let's get back to world and national news. For that, back to Nancy Lyons in our DC studio. Hey, Nance.
Hey, Carol. President Trump is taking steps to accelerate the drawdown of troops in Afghanistan and Iraq. Acting Defense Secretary Christopher Miller made the announcement just a short time ago.
By January 15th, 2021, our forces, their size in Afghanistan will be 2,500 troops. Our force size in Iraq will also be 2,500 by that same date. This is consistent with our established plans and strategic objectives.
Miller says he's informed members of Congress as well as leaders in Iraq and Afghanistan. NATO Secretary General Jens Stoltenberg says the price for the U.S. leaving too soon or in an uncoordinated way could be very high. Groups representing doctors, nurses, and hospitals are urging President Trump to share information about the administration's coronavirus response with President-elect Joe Biden's transition team. In a letter, they say delaying the transition could cost lives. Trump refuses to concede the race and has blocked any cooperation between his administration and the Biden team. As for that Biden team, President-elect Biden has announced some of his top advisors. The White House counsel will be Dana Remus, who previously served as the campaign's chief counsel and was also a deputy White House counsel for ethics under President Obama. Jen O'Malley-Dillon, Steve Rossetti, and Mike Donnellan, all senior aides on Biden's campaign, will also join the White House staff, as well as Louisiana Congressman Cedric Richmond. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nancy Lyons, thank you so much. This is Bloomberg Business Week. Carol Masser in our Bloomberg Interactive Broker studio, along with Charlie Pellet. Charlie, this just crossed the Bloomberg. Robinhood said to seek advisors for a potential initial public offering next year. Listen, when we wrap up 2020, it is the year of so many things, right? It's the year of the virus. It's the year of elections that were like no other, and it is the year of Robinhood.
Without a doubt, Robinhood instrumental in really fueling a lot of the rally that we have seen so far this year. And you know, Carol, the two are not related, or not unrelated, because we've all been quote unquote working from home. We've all been trading from home. Well, not all, but I haven't either. But I'm saying
there's rules here at Bloomberg in case you hadn't read them.
Exactly.
Charlie.
But I use the collective we. People are trading from home because either they're bored, they've got nothing else to do. And I'll tell you one other interesting thing too that's tangential to all of this. With little or no professional sports earlier in the year, if you want to go online, and I'm not equating betting to trading, but there are many people who are using the platform who are also placing stock market bets, and they're going through Robinhood to do it.
Right. It's just a different type of betting, to be fair. Well, what's interesting is, in terms of funding, I'm just trying to see how big this IPO could be. So they are looking to go public maybe as soon as the first quarter of 2020, according to those in the know who asked not to be identified because, of course, the information is private. They raised an additional $460 million in a Series G funding round, and that lifted its valuation, Charlie, to $11.7 billion. The company put that out back in September. I mean, Sequoia's invested in them, Ribbit Capital, DST Global, Andreessen Horowitz, D1 Capital Partners. There's some really well-known names in this.
Yeah, and I'm looking through the story to see if I can find a ticker. I'm looking for some kind of a play on Sherwood Forest, but no such luck there. But I tell you, it's one more factor that plays into this, quote-unquote, get it done right now, with a lot of big companies thinking about Airbnb just yesterday also getting in on the craze.
Yeah, absolutely, man. This, though, Robinhood has been really behind some of the high flyers this year, like Tesla and Hertz Global. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. S&P 500 index edging lower. Pharmacy chains among the worst performers after Amazon unveiled a new push into prescription drugs. Amazon shares, they're up right now by 0.9%. The Dow, the S&P lower, retreating from yesterday's records. S&P down 4 now, little change, down by about 0.1%. The Dow is down 86, lower by 0.3%. Nasdaq higher by 20, up by 0.2%. Bottom line here, investor focus has turned to the surge in virus cases and new lockdown measures, overshadowing optimism that COVID-19 vaccines will eventually end the pandemic. 10-year yield now 0.87%. Gold is down 0.1%, $18.86 the ounce. And West Texas Intermediate crude up 0.4%, $41.52 a barrel. Again, recapping, S&P lower, down 4, down 0.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, really appreciate this. Well, you've watched this company's videos. I know I've tweeted out several. I actually went down a rabbit hole today watching them all over again because I've watched Spot the Dog Running, Cheetah, Wildcast. There's also Atlas, the dynamic humanoid. We're talking about the cutting edge of a company that puts out those robotics. You know who they are. We're talking about Boston Dynamics. They've really become part of our pop culture, which is about, it looks like, to enter a next chapter. Sarah McBride writes about it for Business Week, venture capital reporter at Bloomberg News, and she joins us on the phone in San Francisco, along with Bloomberg Business Week editor Joel Weber. Joel, how much time do you spend watching Boston Dynamics videos?
They creep me out a little bit. So
yes, that's fair.
And is it a rabbit hole or like a robot hole?
It's a robot hole. Nice.
So yeah, I mean, I think these videos of Boston Dynamics robots have been sort of internet sensations for basically as long as they've been making those robots, and they can do some interesting things like climb stairs, and
open doors,
lift heavy things, and in Asia you see them during the pandemic, and they sort of bark instructions at people to stay away from each other and that kind of stuff. The interesting thing that Sarah brings out here is for all of those great internet videos and everything, there's a kind of a lack of a business model underlying it, and that's actually led to some turmoil not only at Boston Dynamics, and that sort of gets to the heart of the story because Boston Dynamics and this whole division have actually been up for sale, and they might catch some big money. How much money and who's buying, Sarah?
Well, apparently Hyundai Motor Corp has been talking to SoftBank about buying Boston Dynamics, and that would be a price tag of around $1 billion, I'm told, which sounds like a lot for what for many years has just been a vanity project. But Boston Dynamics says it's getting to the point where its robots can do some pretty practical things. And Hyundai actually has a walking car division. If you thought the Boston Dynamics videos were terrifying, wait till you see some of the walking car videos. And so who knows?
I think I saw that movie. It was called Transformers.
Exactly. But it's amazing too. I had my producer, Ariel Agami, he went online too because we were talking about the robots, the humanoids that were cheering at a baseball game.
Yeah, this summer, no human fans were allowed, but robot fans were allowed, and SoftBank owns a ton of robot companies, not just Boston Dynamics, so they mixed up some spot dog robots from Boston Dynamics with some of their others and had them cheering on the sidelines, wearing baseball caps and singing fan songs. So
eating hot dogs, having a beer. No, not so much.
It's really interesting
Sarah,
because, there are
Go ahead, Sarah,
some practical things that these robots can do, but the company says its next generation of robots, which will handle logistics and work in warehouses, are the ones that are going to be super practical. And those are called Handle and do a lot of things which don't sound that tough, like taking boxes off of trucks and loading them onto pallets, but apparently are very complicated for the types of machines in factories to do now. That's where they say they'll really shine.
So, interesting ingredient in all of this, Sarah, because if it seems like there's actually a potential to make money just around the corner why not stick with that? Why would SoftBank look to unload this now?
Well, SoftBank has had so many challenges. I mean, we had that big cover story last year about some of the challenges they've been facing. WeWork has imploded, and then this year with COVID, they were just in a position where they were trying to raise cash. They sold off a lot of businesses, including ARM, and so this was just one obvious place in their portfolio where it had been sucking money out of SoftBank. It was costing them over $150 million a year just to run Boston Dynamics. So this was an obvious place to make a cut where they could
worth mentioning there that also worth mentioning there that SoftBank isn't the only owner that Boston Dynamics has had before SoftBank. Who was it again, Sarah?
Little known company.
Google. So same thing. Google was perfectly prepared to have a vanity project, and then a new CFO came in, started kind of putting financial controls on different parts of the company. It was part of Google X, that part of Google that does super cool cutting edge projects, and she just said, nope, we need to impose some financial discipline. So they got sold to SoftBank, and that was complicated and had to go through a review by the government because Boston Dynamics has very cutting edge technology. In fact, the military used to pay for a lot of Boston Dynamics projects that stopped under Google, and now if it sells again to another non-U.S. entity, it would again have to be reviewed by the government. So it's a complicated deal.
Sarah, one thing I want to ask you, I mean, this is a company that's been around for almost 30 years. I mean, and it does sell stuff, it does sell robots, but can it be a really successful company, and really become something? And almost, I think you end the story saying that, it's an opportunity for them to kind of become the Google of the robotics industry, or somebody has talked about it. We really don't have necessarily someone of this ilk out there.
Yeah, robotics is a fascinating field with hundreds of startups and so many people trying to achieve dominance in the field. And they had owners who were content to let them just spend hundreds of millions of dollars researching the best types of robots. So arguably they are now in this very unusual position because they had owners who for a while didn't really care about how much money they were spending bankrolling Boston Dynamics. But the company was profitable in the past before Google bought it, and it was doing more defense, military work. And it says it can be profitable again. And they certainly have the technological chops. So it could be a really interesting new chapter in their life.
And I mean, Joel, I think you've got to get one of these dogs. I'm just saying.
Well, I got the real dog already.
You've got the real dog. Maybe a cat.
Find it competitive, yeah.
$75,000.
I think
Can I expense one?
$75,000?
No, you may not. A robotic cat sounds even creepier than a real cat. The other thing that I'll just point out in all of this is that there are other robotics companies that I find really interesting, like Fanuc is one in Japan that does really like heavy equipment and stuff. So I actually think strategically for Hyundai, this is sort of a way of picking up a piece that, if it's on the brink of having some breakthrough products, it could become sort of a crown jewel in the Hyundai portfolio there.
It's a really great point and a great story. And I highly recommend everyone check it out at Bloomberg.com. Sarah McBride, thank you so much. Venture capital reporter at Bloomberg News on the phone in San Francisco. Joel Weber, editor of Bloomberg Business Week on the remote access from Brooklyn. If you are listening in New York, D.C. or San Francisco and watching on YouTube, Bloomberg Business Week, we're going to continue. If you're listening on Bloomberg 106.1 in Boston, Bay State Business is coming up next. And coming up next, we've got Compass Pathways Chairman, CEO, and co-founder. He's going to talk about magic mushrooms. This is Bloomberg.
Bloomberg World Headquarters. I'm Charlie Pellet. We move into the final hour of trading on this Tuesday, November 17th, with the Dow, the S&P retreating from records, NASDAQ pushing higher, stocks pulling back as investor focus turns to the surge in virus cases, along with new lockdown measures, and that is overshadowing optimism that COVID-19 vaccines will eventually end the pandemic. Here's where we stand. S&P down now by 7 points, a drop of 0.2%. The Dow is down 108 points, down 0.4%. NASDAQ up 12. That is a gain of 0.1%. 10-years up 11.30 seconds. 10-year yield 0.87%. We've got gold down $1.88 the ounce, lower by 0.1% at 18.87. And West Texas Intermediate crude up 0.3%. WTI up 14 cents a barrel, 41.48 right now on West Texas Intermediate crude. Markets rallied yesterday on optimism for a coronavirus vaccine and those positive results out of Moderna. So how might that change prospects for economic growth in Europe? Christine Lagarde is president of the European Central Bank, and she was interviewed today at the Bloomberg New Economy Forum, and here's what she had to say.
I'm not sure that is going to be a major game changer for our forecast, simply because what we had anticipated in our baseline was that at some stage in the first half of 2021, there would be a vaccine and that it would be rolled out in the course of 2021. So it might be a little bit accelerated given the news that we're receiving from the various horizons, Germany, US. But I don't think that is going to be a game changer, so to speak.
Amazon has unveiled its biggest push into selling prescription drugs with the launch of a digital pharmacy and discounts for paying U.S. Prime members. That has sent shockwaves through shares of drugstore chains and distributors. Amazon shares, they're up by 0.8%. CVS down 8.4%. Walgreens Boots Alliance down 9%. Rite Aid plunging 16%. Recapping, S&P down 0.2%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
This is Bloomberg Business Week with Carol Masser on Bloomberg Radio.
So in an upcoming edition of Bloomberg Business Week Talks, it will be featured in the magazine. We're going to talk to one of this year's successful IPOs, which is up more than 100% since its debut as an ADR on the New York Stock Exchange in September. It's the company that has patented a synthetic version of the active ingredient in so-called magic mushrooms for use in treatment-resistant depression. We are delighted to welcome to Bloomberg Radio Compass Pathways Chairman, CEO, and co-founder George Goldsmith. He joins us on the phone overseas in Europe. George, it is so great to have you here with us. We've been talking about your company since it was featured in Business Week magazine. How are you?
I'm doing well, Carol, and thank you so much for having me on, Steve.
Well, it's great to have you here, and what a year it's been, and what a year to go public. First of all, tell us a little bit about your company and how you came across this, because I do understand it's a pretty personal story.
Yes, it is a personal story, and I think that in many ways, so many interesting companies do form that way. And so, from our point of view, we had our son really struggled with mental health issues when he went to university, like far too many young people do. We thought, how hard could this be? You know, there are good treatments and therapies, yet the more he encountered, the more difficult it was for him to be recognizable to us with the side effects, and it didn't really help him. So we then started talking to lots of different people, doing our own research. My co-founder and wife, Ekaterina Manovskaya, is a doctor. And in her own research, she stumbled across psilocybin and psilocybin research, and we became really intrigued by this. The other thing that happened simultaneously is the more people we talked about our own challenges that we were facing, the more we heard from others about their challenges. And these would be long-term friends who we'd known for quite a while, but they never felt comfortable sharing their own challenges until we did. And that really led us to understand that almost everybody has a story of, you know, how the current system isn't quite helping enough people well enough. And that really inspired us to look at this research. We saw its promise, and the issue is, how do we bring it to patients, not just bring it into the next journal article? And journal articles are critically important, but they're necessary, but not sufficient to bring this to patients. And that's really our commitment.
Well, and I do, you know, it's interesting. I was doing some reading on this, and that my understanding is for those patients and individuals who deal with and suffer depression, that the existing treatments only really work for about 70% of patients, leaving as many as 90 million still struggling around the world. I think that's some World Health Organization. So it is a huge, and I hate to put it in business terms, but we are Bloomberg, it's a huge market.
It is. I hate
Forgive
to
me.
say great markets of suffering, but
I know. Forgive me.
It is a huge market, right, in that sense. And so there's a tremendous amount of suffering. And I think we've been pretty good at developing tools to ameliorate 70% of that. But the 30% is quite difficult, because what happens is with each new treatment, those people actually have less and less likelihood to be helped by what's next. And there's been very large studies in the U.S. by the National Institute of Mental Health, and we really have documentation for that. So if we have the opportunity to do something unique here, which is a single dose. So what we do is we provide a very high dose of psilocybin in a carefully controlled setting under supervision by specially trained therapists. So this isn't anything that anyone would do at home. And patients listen to a special soundtrack, and they're really supported through this process. And what happens is that afterwards, for many patients, they experience an immediate reduction in depression that actually lasts for quite a while. Wow. And what our research is really looking at is, well, who benefits? Not everyone. So who doesn't? And what separates the people who benefit for a few weeks from the single dose, for a few months, and people who actually have even longer experiences? So we've went to the FDA, and actually we're operating now in 10 countries doing clinical research, 21 research sites. And we're really looking at how do we do the real deep research to generate the information and insight we need to go to what's the next phase for us, which would be phase 3 trials.
Right.
And we'll be reporting out on our phase 2 trials about a year from now. So we've been really excited about the progress.
Yeah, and I should say that the FDA has named your experimental treatment, quote, a breakthrough therapy, which is, really wonderful to kind of get that acknowledgement. But it also means now you've got to do more rigorous, more risk-adverse testing. It's a lot of pressure, I'm assuming. And you've got to make sure you're working with the right scientists, the best clinical trials, correct?
Well, absolutely, and absolutely, and then even more so, right? Because obviously there's a history here, and what we're looking to do is the highest quality, most rigorous research. The first port of call for us was actually, even before we formed the company, to speak with regulators, payers, just to understand what did they think about this. And what we were really struck by in all the conversations, and the breakthrough therapy designation is, I think, a perfect example of this. The problem is so big. That's what you said. There's such a huge amount of suffering here. The tools we have are good for some, but not good enough.
Right.
They just saw that this is promising. So what we found is that a huge amount of support, but we really have to get this right. We have to get it right for patients, for their families, and society.
Just got about a minute, and then I've got to do some news, and then we'll come back. But how big of a market opportunity do you think is there for Compass Pathways? Just quickly.
Well, I think that what we see in this is that obviously there are about 90 million people suffering from so-called treatment-resistant depression. But to be clear, this is not a group of people who are resisting treatment. This is a group of people for whom our treatments don't work. And so perhaps, I think this is really, really important. But that's just the start, because really what we're looking at is working on areas of mental health where people get caught in patterns of negative thinking or patterns of obsessive thinking. That happens in other areas like anxiety or OCD or other things. And we're really curious about how could this mechanism of a high dose of psilocybin therapy yield benefit for other classes of people who aren't helped enough.
So is this like potentially a multi-billion-dollar drug potential? Just quickly, just got about 15 seconds here.
Well, I think that it is potential to have it be a therapy. It's really important that it's not a drug. It's a drug that's given in combination with psychological support. And that's the critical bit. We can talk about that after the news.
That would be great. George, thank you. You did my break. We love you. George Goldsmith, he's Compass Pathways Chairman, CEO, and co-founder. He's kind of my co-host on this Tuesday. Let's get back to World and National News headlines. Over to Nancy Lyons. Nance.
Thanks, Carol. Not long after the U.S. announced that it's pulling troops out of Iraq, Iraqi security officials announced multiple rockets have hit inside Baghdad's fortified green zone near the U.S. Embassy. Earlier, Acting Defense Secretary Chris Miller said there would be a drawdown to 25,000 troops in both Iraq and Afghanistan, 2,500 troops, rather, in both Iraq and Afghanistan.
If the forces of terror, instability, division, and hate begin a deliberate campaign to disrupt our efforts, we stand ready to apply the capabilities required to thwart them.
Miller says the U.S. military will carry out Trump's orders in both countries by January 15th. The Senate Judiciary Committee is pressing CEOs of Twitter and Facebook about their policies regarding censorship on their platforms. Republicans have charged they're biased against conservative views, but ranking member Senator Richard Blumenthal says some of the worst disinformation on social media is coming from the top Republican, especially regarding the election.
The president has used this megaphone to spread vicious falsehoods in an apparent attempt to overturn the will of voters.
Facebook CEO Mark Zuckerberg told lawmakers he's pleased about aggressive efforts his company made to prevent foreign interference in the election. Leaders of the American Hospital Association, American Medical Association, and American Nurses Association say the Trump administration must share critical COVID-19 information with President-elect Joe Biden's transition team to save countless lives. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. You're listening to Bloomberg Business Week. Carol Massar along with Charlie Pellet. We're going to get back to the chairman, CEO, and co-founder of Compass Pathways, George Goldsmith, in just a moment. In the meantime, a story on the Bloomberg caught our attention. United Nations Humanitarian Relief Agency, UNICEF, Charlie, looking to recruit some of the airline industry's biggest operators. It's all about distributing a coronavirus vaccine really to the world's poorest nations. And Bloomberg New Economy Forum is underway, and we talk a lot about what's going on in the world, and we talk about the virus with developed societies, but one of the things that's coming out of theme is making sure those developing economies are taken care of when it comes to the vaccine.
And here's my understanding of the virus the way it stands right now. You've got cold and you've got colder.
Yeah.
One is a challenge, the other is a major challenge in getting into the places where it's got to be, correct?
Yeah, well, exactly. And that was part of, I think, the concerns about the Pfizer drug in terms of the extreme cold temperatures that the drug needed to be stored at. And you think about what then is involved logistically in distributing that makes it tougher. Moderna, it's a different story, makes it a little bit easier in terms of that. It doesn't require the same thing as Pfizer. But nonetheless, you need to think about the billions of people that are in this world. The billions of people, if you think about an emerging economy like India, where people are in remote places, there isn't an infrastructure already established. Healthcare is a struggle. You need to think about how do we make sure those people are taken care of and really at risk if we don't.
And Carol, very briefly, I'm going to go rogue. Small
Sure,
time, not
go
big
rogue.
time, but I was a couple of years ago. I happened to be in Tel Aviv. I love airplanes. And I saw
know
an
you
airplane,
do.
saw a big cargo jet sitting there on the runway. All it said was challenge accepted. I said, well, what does that mean? So I looked it up on the internet. Turns out that it's Cal Cargo Airlines. You go to their website. Number two, why choose the airline? Because they ship products, unique products for special cargo needs, including pharmaceuticals. And they show pictures of pharmaceuticals. They also do cold storage, and they also do racehorses too. But this tells you about the kinds of requirements, the kinds of airlines that are going to be needed to get this stuff out there.
Yeah, it's pretty remarkable. And like you just have an understanding, right, of things that are going on a regular basis to make sure that folks that need things and those that need it kind of get it. All right, Charlie, thanks.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We begin with a developing story and word of another round of job cuts at Goldman Sachs. Goldman planning a second round of job cuts after a pause because of the pandemic. Again, developing story, but repeating. Goldman Sachs preparing to trim its workforce for the second time in just about 3 months. Also, President Trump said to be seriously considering a 2024 bid for president. This according to CBS, citing sources. 3:17 on Wall Street. That means it is time now to head on over to the First Word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. U.S. stocks trading in the red, but well off session lows. Dow's currently down 165 points, was down 430. S&P's dropped 14. NASDAQ is lower by 13. The U.S. 10-year yield at 0.87%. Gold trading little changed, and transports rise 37 points. Among the main 11 S&P sectors, only real estate and energy were in the green. And leaders in the Dow, Boeing, Salesforce, and Merck, while Chevron and Disney led to the downside. After earnings, Walmart and Home Depot beat estimates. And in other news, Robinhood is said to seek advisors for a potential IPO next year. And drugstore names were under pressure today. On news, Amazon is expanding its push into healthcare with an online pharmacy. Shares of GoodRx plunged 20%. Wrapping things up, Lazy Boy and Neo report after the bell. Live from the First Word breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you, Bill, to hear live breaking news over your Bloomberg type Squawk SQUAWK on your terminal. And that's the Bloomberg Business Flash.
Thanks, Charlie. Let's get back to Compass Pathways Chairman, CEO, and co-founder George Goldsmith on the phone overseas over in Europe. Hey, so before I move on, though, you did say, and I thought this was a really important distinction, George, is you said it's not a drug, it's a potential therapy. Having said that, I do think, our listeners are curious about how big that market size might be. Anxiety disorders, depression, the depression treatment market, it's expected to be something like $21 billion by 2025. So what's your expectation or thoughts on this?
So a few things. One is I appreciate your digging into this. So just to give you and your listeners some perspective, depression is the leading cause of disability worldwide, just depression. And in the U.S., the annual cost of depression is forecast to be about $200 billion per year. And a large number of that is direct costs of outpatients, inpatient medical services, pharmaceutical services, and the number you referred to is largely in the pharmaceutical space. Right. Now, what we know is that about a third of patients, as you mentioned, simply aren't helped. And the third of patients that aren't helped actually are about 3 to 4 times more expensive, 2 to 3, it depends on kind of where you're doing the data, than patients who are helped by these medicines. And so we have not only a very large group of patients who aren't helped, but also those are the most expensive patients. And so if we could make a difference in their lives, I think there's a huge opportunity to really develop a new model of care for them. And this is what's so interesting about what we're doing. It is a therapy, right? It's a single dose under supervised circumstances with preparation and then some follow-up afterwards. And what's really unique about this, they did some really fascinating work at Johns Hopkins where a lot of this research was reborn over 10 years ago. One of the questions they asked patients who had gone through this, and they asked this question 6 weeks after this experience. They said, how meaningful would you say this experience was in your life? Personally meaningful. And people were given, is it the most meaningful, the top 5, and so over 70% said the single experience was one of the top 5 most meaningful experiences of their life.
Right. So you can't really put
it was the most meaningful.
You can't, right? No. And I wish we were in person because you could see me smiling, because you can't put a value on it. And I have a sister who works in this area, so I've kind of grown up learning about this. And I agree that there's an unbelievable cost by not, helping out this sector of our population. And also it's invaluable in terms of they basically get their lives back. Having said that, you kind of evaded my answer. So is this like a multi-billion-dollar potential treatment or tens of?
I think it is Yes, I think it is multi-billion.
Yeah.
And we've had but again, That's if the trials work.
Let's talk about that, because that's a big deal. I mean, listen, we're all learning about the drug process, right? Because of the drug approval process, because of COVID. What challenges does the U.S. present? What regulatory hurdles still remain? And I do wonder if you're following kind of the playbook from marijuana, kind of prescription first, recreational second. How are you thinking about it?
Not at all.
Okay.
No, we're really thinking about the huge unmet need there is for patients. And that's, what we're really focused on is access. And that means approval by Medicaid, by, insurers. So from day one, we've been really focusing on making sure that if this, in fact, is successful in trials, people have access to it. And that means working with insurers, even in the design of clinical trials, to make sure they have the evidence that says, hey, this is for this patient population. So that's super important to us. It's a different model than a recreational model.
You're going to have to come back because I want to talk more. We still have a few minutes, but I just want to squeeze in some things. When did you recognize the potential in this space? Was it after your son, or was it when you started doing some digging? Like, what was the thing that you just said, kind of the aha moment?
Well, the aha moment was being awakened in February 2013 by Katya, my wife, who was busy doing medical research in her sleepless nights as a doctor. And she said, I came across this thing called psilocybin. It's the active ingredient in magic mushrooms. You were in the 60s and 70s. What do you think of this? So
say what, honey?
Finding this. And obviously I had grown up in that time, so I was familiar with these things, but it was just a whole world that I had completely forgotten about from that time.
So listen, just got about 45 seconds left here. Why synthetic psilocybin? And I'm just curious how you produce
Super
it.
Easy.
And just quickly, it's
Super easy. It's a medicine, so we need to know exactly what patients are receiving, what the dose is. It has to be the same quality every place on the planet that it's given. So that's why you have to use synthetic. It's the regulatory path forward. It's one where we always know there are no impurities, that people get exactly what it says on the tin. And then we can do controlled research. So it's super important that in a medical setting, we use synthesized psilocybin, and that's something that we've spent a lot of time developing and working with regulators on both sides of the Atlantic to make sure it's the highest purity and genuinely a medicine with evidence. I'll just end. The difference between a drug and a medicine is evidence. And so we're creating a medicine from this, which is psilocybin, our proprietary form of that, and then with the evidence that works.
Got it. George, we have to go. Please come back. I'd love to learn more. George Goldsmith, and also listen to more of the trials. George, of course, of Compass Pathways.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 1061. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
You're listening to Bloomberg Business Week. It is Tuesday. I'm Carol Massar in our Bloomberg Interactive Broker Studio. A little bit under a half an hour to go until we wrap up the trading day. In the meantime, coming up next is Dave Wilson and his chart of the day. In the meantime, let's get a check on that trading day. Hey, Charlie Pellet.
Well, hello there. Can't forget that song of the day either. That's why I listened. We've got the Dow, the S&P, now NASDAQ, all declining. As you mentioned, 28 to go until that closing bell. Do want to begin with that developing story that Bloomberg's reporting involving Goldman Sachs. It is preparing to trim its workforce for the second time in just 3 months as a moratorium on firings during the pandemic gives way to a push to improve efficiency. Goldman shares, they are trading higher today. Goldman up now by 0.6%. Sources tell Bloomberg Robinhood Markets, the trading platform that has proved popular with novice investors, is asking banks to pitch for roles in an initial public offering. Those sources say the company is aiming to go public as soon as the first quarter of 2021. The Dow, the S&P, NASDAQ all lower right now. Let's get right to the numbers. I'll give you the why in a moment. S&P down 19. That is a drop of just about 0.5%. Dow Industrials now down by 191 points for the Dow. That represents a drop of 0.6%. NASDAQ spent much of the session swinging between gains and losses, but in the race to the finish here, NASDAQ now lower by 27 points, a drop there of 0.2%. Stocks are pulling back from records as investors turn to the surge in coronavirus cases and new lockdown measures that is overshadowing yesterday's optimism that COVID-19 vaccines will eventually end the pandemic. Moderna has announced a supply agreement with the government of the United Kingdom to supply its COVID-19 vaccine candidate beginning in March of 2021 if it is approved for use by UK regulatory authorities. Dr. Amish Adalia is a senior scholar at Johns Hopkins Bloomberg School of Public Health, and he says the news from Moderna yesterday and Pfizer last week certainly is groundbreaking.
mRNA vaccines are going to have, a major impact, I think, on vaccine development in the future. These are the first two that we're really seeing in advanced clinical stages. But what they offer is the ability to very elegantly be able to make a vaccine quickly and put it into clinical trials, because all you need to know is the genetic sequence of whatever you're trying to immunize against. And then you can basically print it off and then inject that gene into people, and then your cells start to make that protein and your immune system reacts to it.
And again, Moderna shares, they are lower today after yesterday's surge, down 4.8%. Pfizer on the plus side, up 1.3%. And shares of BioNTech out of Germany, it is moving lower now by 5%. Again, stocks lower across the board. 10-year yield 0.86%. We've got gold down 0.2%, $18.85 the ounce, and crude West Texas Intermediate up 0.1%, $41.40 a barrel. Recapping, S&P down 20, down 0.6%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
It is indeed. All right, Charlie, thank you so much. Got my Googling fingers all ready for the chart of the day and the song of the day. We're going to get to Dave Wilson in just a moment. This is Bloomberg. All right, Dave. It's a gift for you. It's Bruce.
Absolutely.
That's nice.
And it's not just for me either.
Why is it not just for you?
Because, I listen to Spotify while I'm here in New Jersey working, and one of the things I listen to today is the official playlist for Barack Obama's new book, A Promised Land.
Are you serious?
Quite serious.
That is just, first of all, wait a minute. That is just so cool to have a playlist to the book.
Yep.
Okay.
All songs that are mentioned in one way or another in the book. And yes, The Rising is there.
Nice. So wait, does it also relate back to your chart?
Well, sure.
Okay.
It's the rising of stocks, so to speak.
Got it.
And what we're talking about here is how broad-based the gains in stocks have become. And it's something that actually a number of analysts have latched onto in the past few days. Just to tell you, there's some pretty broad-based strength going on here. And one of them is Ari Wald. He's the chief technical analyst at Oppenheimer. And the indicator that he focused in on is the percentage of stocks traded on the New York Stock Exchange that are above their 200-day moving average. It's a gauge of price trends, pretty popular one. And what happened at the end of last week is that we saw the indicator move up to more than 76%, the highest reading since July 2013, according to our data. And so, Wald looked back over time. I go back in the chart all the way to the mid-1990s. That's when our data begins on this indicator. And, you see, at least he did, that, there were similar levels before stocks rose in 1995, 2003, 2009, 2013, 2016. So the way he figures it, we expect 2020 to join this list. That's what he wrote. So, in other words, you're looking at a bull market indicator, that there's the kind of strength, not just in the big tech companies, as we've seen so much over the last few years, but in the broader market now, to suggest, at least to him, that, stocks are headed higher here. And if you want to know more, folks, send me an email. I'll get you the chart, the explanation that goes with it, and everything I do going forward. The email address is dwilson@bloomberg.net. That's dwilson@bloomberg.net.
Yeah, interesting and timely, especially as we try to figure out kind of where the market goes from here. Dave Wilson, thank you so much. Bloomberg Stocks columnist with his chart of the day. Do want to bring you two headlines, though, crossing the Bloomberg. The U.S. Senate blocking Judy Shelton's nomination to the Federal Reserve Board. That just crossed. Again, the U.S. Senate blocking Judy Shelton's nomination to the Federal Reserve Board. This was something certainly that's been in the news and something we've been kind of awaiting to see where it goes. Another headline, the Pennsylvania Supreme Court ruling against President Donald Trump on election watchers. So there has been some concerns about those individuals who were able to watch the actual vote count. And we know that we've talked about that a lot here on air. But again, Pennsylvania Supreme Court ruling against President Trump on those election watchers. So another legal decision, safe to say, that we've been talking about here on Bloomberg, and that has over the last couple of weeks come to light, that has gone really against the president and his team as they essentially work to fight the election outcome. All right, you're listening to Bloomberg Business Week. We've got about 20 minutes left in today's trading session, and a little bit of a different tone here, but we are definitely, as Charlie mentioned earlier, off our lows of this session, still down about 0.5% on the S&P 500. The S&P right now at 3609. Dow Jones Industrial Average at 29,769, down 181 points, down 0.6%. Nasdaq just a hair lower, just down about 15 points. Again, though, controversial. Judy Shelton, we've had a lot of discussions about that, and ultimately the U.S. Senate blocking that nomination to the Federal Reserve Board. All right, you are listening to Bloomberg Business Week. We want to get back to world and national news headlines. For that, let's bring in Nancy Lyon. She's in our 99.1 newsroom in the nation's capital. Hi, Nancy.
Hey, Carol. Acting Defense Secretary Christopher Miller says the U.S. will reduce its troop levels in Iraq and Afghanistan down to 2,500 in each country. He says the decision fulfills President Donald Trump's pledge to bring forces home when conditions were met that kept the U.S. and its allies safe. The new plan will accelerate troop withdrawals, despite arguments from senior military officials in favor of a slower, more methodical pullout. The chief executives of Twitter and Facebook returned to Capitol Hill to respond to Republican complaints that they treated pro-Trump submissions unfairly. And they are also facing Democratic complaints they didn't go far enough to quash misinformation. Bloomberg's Irv Chapman has more from Washington.
Mark Zuckerberg said Facebook took down 100 bad actors while encouraging Americans to vote.
I'm proud of the work we've done to support our democracy. I believe this was the largest election integrity effort by any private company in recent times.
Jack Dorsey said he sought to bolster confidence in Twitter.
People would not put up with abuse, harassment, and misleading information that would cause offline harm, and they would leave our service because of it.
Senators of both parties, as well as Zuckerberg and Dorsey, called for modifying the law that absolves all social media have responsibility for what users post, but no consensus on what exactly to do. In Washington, Irv Chapman, Bloomberg Radio.
Well, President-elect Joe Biden is moving to fill some top White House staff positions, drawing from the senior ranks of his campaign and some of his closest confidants. Biden confirms former campaign manager Jen O'Malley Dillon will serve as deputy chief of staff. Global news 24 hours a day on air and on Bloomberg Quick Take. Powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right, Nance, thank you so much. You're listening to Bloomberg Business Week. Carol Massar, along with Charlie Pellet, a lot of headlines. And of course, we just mentioned, Charlie, the one involving Pennsylvania, specifically the U.S., or I should say, the Pennsylvania Supreme Court ruling against President Trump on election watchers. There's a lot still going on with the Trump team and White House when it comes to the election outcome. And last week, the president, as you know, put the former New York mayor, we're talking about Rudy Giuliani, in charge of the court challenges to his loss in the election. They have, again, and on top of it, the Pennsylvania ruling that we just mentioned, they have seen nothing but setbacks. But Rudy Giuliani, he's asked the president's campaign to pay him a lot of money for his legal work.
Indeed, $20,000
like you
a
and
day.
I make every day.
I wouldn't get out of bed for that amount of money. But 20 grand a day. Now, this is according to the New York Times. However,
Correct.
I want to zip down to the 7th or 8th paragraph that says, that quotes the former mayor is saying, quote, that whoever said that he made that $20,000 a day request is, quote, a liar, a complete liar. So let's put
He
that out
says he
there.
never asked for $20,000.
He says he never did whatsoever. In fact, the story goes on to say that he said, something to the effect of, we'll work it out at the very end. All of this, though, as the Trump campaign sets up a legal defense fund, and according to the Times, said to be raising significant sums to continue legal challenges.
And as you said, to be fair, he says he never asked for it, but $20,000 a day would have made Mr. Giuliani, who has been Mr. Trump, President Trump's personal lawyer for several years, among the most highly compensated attorneys anywhere. And just, a little perspective there. Just so that we have an idea of what that number, why we are bringing out this number, wherever it came from.
Well, it came from the New York Times, and again, just
according to those familiar, from what I understand.
Exactly, and again, to be fair, as you say, the former mayor denies that that request was ever made.
Yeah, interesting. Like everything that's been interesting in 2020. I'm just going to put it out there. All right, Charlie, thank you so much. You're listening to Bloomberg Business Week, and this is Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. A number of headlines to pass along to you out of Illinois, where the state's governor has announced new measures to stem COVID. The governor is urging residents to stay home when possible, says they're trying to avoid a stay-at-home order. New restrictions will target the retail industry, retail businesses to run at 25% of capacity. Busy day on the news desk. Judy Shelton's nomination to the Federal Reserve Board blocked today by the Senate. A stunning defeat for Senate Majority Leader Mitch McConnell and a blow to President Trump's drive to reshape the U.S. central bank before he leaves office. And from London, billionaire hedge fund manager Michael Hintz has stepped up succession planning after a turbulent year at his investment firm. Hintz disclosing plans today to form a group of senior partners at his London-based firm CQS, this according to a letter to his clients seen by Bloomberg. Stocks are trading lower. 12 minutes to go ahead of the close here. We've got the S&P down 18, down 0.5. NASDAQ down 17, a drop there of 0.1%. The Dow down 186, a drop now of 0.6%. 10-years up 11.30 seconds. 10-year yield 0.87%. Gold down $9 the ounce. That is a drop right now of 0.5%. West Texas Intermediate crude little changed at 41.36 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. Just drive, baby.
It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
It is time for the drive to the close on this Tuesday. Back with us is Ann Maletti, head of active equity at Wells Fargo Asset Management. They've got roughly $607 billion in assets under management. Ann is back with us on the phone from Milwaukee, Wisconsin. Hey, Ann, good to have you here with us. How's it going?
It's getting cold, Carol. I'm sure it is.
Darn winter. I know, right? How did that happen? It's kind of dark almost already here in New York. How are you guys doing, though, with the virus? I know out Midwest and parts of the country, it's been pretty tough.
It has been a little bit tougher here. Clearly, the weather changing has had an impact. But so far, most of us are staying strong and healthy, and we're trying to do that the best we can with this cold weather.
Well, I'm glad to hear that you guys are doing okay. Having said that, I do wonder if at all your market outlook, your market sentiment has changed at all, considering here we are in the last week and a half. We've had a big development from Pfizer, a big development from Moderna, and my last guest at the top of our show talked about the medical world and saying that we're kind of in the maybe 7th inning when it comes to the virus, but the 7th and 8th innings, they're going to be really rough. I just wonder how all of this maybe impacts your visibility when it comes to investing.
Yeah, it's a really good question because I do think we've gotten some of the best news we could have gotten all year with the Pfizer and Moderna news. But we do have this little bit of time now where we're waiting for the vaccine. And so it does feel like there's a chance that we could have an air pocket in both in the economy and in the market as we're waiting for the vaccines to get distributed. And, we do see that more states are starting the shutdowns again. We have businesses closing again. And so that has a real impact and certainly more people getting sick. I think we're going to see the effects of that play out into the market. But as we both know, the market is focused on the long term and on the recovery. And we have seen a pretty sharp recovery so far. And, if you get the vaccine out in masses by spring, that recovery can really continue. And I think the economy is going to be in really good shape in 2021. And certainly we'll have easy comparisons. And that's why I think you see the majority of strength.
Well, yeah, right. I mean, to some extent, we start to have a little bit of visibility. So at this point, we've talked a lot about market rotation. We've talked about the value names again. I mean, are those parts of the market that you're interested in looking at, think investors should be considering?
Certainly, our managers were paying close attention to the cyclical recovery very early on. And as you said, Carol, we've seen some of that play out. We saw the gap between growth and value, a historic gap, start to narrow. And now I think we're on more of a level playing field. Certainly, technology is trading at a premium, but it's demanding that premium because it's providing growth in a world where growth is still scarce. But value and cyclical stocks, there still are a lot of attractive names there, but you have to be choosy. And the reason why I say that is you want to avoid companies that have weak balance sheets, certainly companies that are not well competitively positioned, because the economy is rapidly changing, and we're seeing that through this pandemic. The economy has shifted more to digitalization, and almost in every aspect in our lives, even within manufacturing. And so companies need to be able to invest in the future and to stay alive, quite honestly, and to remain competitive. And so that's really what our managers are focused on. There's an intense focus on balance sheets, on cash flows, and management teams that are capable of leading their companies.
What's interesting too, Anne, and I think about this, I've thought about this a lot, after the financial crisis, that there was a point where you looked at a Citigroup at $1 a share and you knew, okay, especially after we got through what happened to Lehman and we saw other companies, we saw at some point that no matter what, the government, the Federal Reserve, there were going to be a safety net to protect these companies, right? Because we couldn't let everything come undone. And I do feel like it's not the same. It's not apples to apples. This isn't a financial crisis. But nonetheless, at some point, we see it with central banks, global central banks. We see it with the U.S. Central Bank. We see it even with policymakers, and we'll see if we get another round of stimulus. But there is some understanding that we can't let everything come undone on Main Street or Wall Street.
Right. You're absolutely right about that. I think we all know the airlines can't all go bankrupt. We can't have every industry certain parts of every industry at risk. And there certainly are, restaurants, hotels, that travel and leisure sector that really hasn't been able to come back in any strong way, certainly has been challenged. And so I think you'll see some stimulus go toward those businesses, and certainly, hopefully, to the small businesses that really have had to bear the brunt of this pandemic.
So where don't you want to be right now? Where would you just say, hey, guys, you're sitting down with your best friends, you're having a glass of wine, and you're saying, don't even think about it?
I think the areas that a lot of our managers are underweight the index.
And you could be having a glass of water. You don't have to drink. You don't have to have alcohol. I'm just going to put that out there. Forgive me. I think people think I'm a wino. I'm not.
I think all of us probably, dip in a little bit more than we used to.
It's been rough.
But, I would say that, our managers have been underweight energy. And I know that's a relatively small part of the benchmarks now, but it has been an industry that has been challenged. For a lot of different reasons.
Still our worst performing group this year, down 40%. It's just been slammed.
Yes, although, you've seen this strong resurgence over the last couple of weeks, right? So, you might miss out on some of these surges, on these momentum rallies. And then we have been, our managers across the board have also been underweight banks as well, because of the interest rate pressures that will likely continue.
Anne Maletti, always good to hear your voice. Take care, stay safe. Anne Maletti, Head of Active Equity, Wells Fargo Asset Management, on the phone from Milwaukee. They've got about $607 billion in assets under management. All right, we've just got about 3.5 minutes left in today's trading session. We'll have that closing bell in just a moment right here on Bloomberg Radio.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. There you have it, sound of the closing bell at the New York Stock Exchange as we wrap things up on this busy Tuesday, November 17th. Folks from Canadian National Railway Company ringing that closing bell. A down day for the Dow, the S&P and NASDAQ. S&P and the Dow retreating from records. Stocks move lower as investor focus turned to the surge in virus cases and new lockdown measures, overshadowing optimism that COVID-19 vaccines will eventually end the pandemic. Your closing numbers: S&P down 17, a drop there of 0.5%. The Dow down 166 points, down 0.6%. NASDAQ lower by 24, down 0.2%. 10 years up 10.30 seconds, 10-year yield 0.87%. Gold down 0.4%, 18.81 the ounce. And West Texas Intermediate crude down 0.2%, 41.42 a barrel. So again, stocks retreat from records, a down Tuesday. As for the overall mood of the market, Anne Maletti is head of active equity at Wells Fargo Asset Management. She was our guest moments ago right here on Bloomberg Business Week.
The market is focused on the long term and on the recovery, and we have seen a pretty sharp recovery so far. And, you know, if you get the vaccine out in masses by spring, that recovery can really continue, and I think the economy is going to be in really good shape in 2021.
Amazon.com has unveiled its biggest push into selling prescription drugs with the launch of a digital pharmacy and discounts for paying U.S. Prime members that has sent shockwaves through shares of drugstore chains and distributors. Amazon shares did advance today by about 0.1%, but on the minus side, CVS plunged 8.6%. Shares of Walgreens Boots Alliance lower today by 9.6%, and Rite Aid, look at that stock, lower today by 16.3%. Tesla into the S&P 500 index up by 8.2%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Wild thing, think you move me. I got a few moves I know you'll like. Shaking all over.
Bloomberg Business Week. Movers and shakers.
Shaken, not stirred.
On Bloomberg Radio.
All right, it's time to take a look at some of the stocks and sectors on the move. Bloomberg News cross-asset reporter Sarah Ponzak is in our Bloomberg Interactive Broker studio, lending me an assist just as I needed. Big picture, S&P 500. We know it was a different tone today. I feel like it's been kind of working its way there since Monday. 178 names in the index higher today, 326 lower, 2 unchanged. But it's been pretty broad-based, right, in terms of the moves to the downside.
It has been pretty broad-based. If we think about what we saw yesterday, we still saw a nice gain, but we didn't see the optimism that we had seen last week on the back of that Pfizer news. We had already seen this starting to tone down. Well, today, you see that turnaround. You see a fade. Granted, it's not a large fade by any means.
No, and we ended up off our lows, correct?
Yes, we ended up off of our lows. By no means was this a large sell-off. But when we have become so accustomed to new highs day after day, very large rally, record outperformance for value stocks, today was a different tone, and also just a different tone from investors today. Bank of America, their fund manager survey came out, and they pointed to the fact that fund managers in the survey were the most bullish since 2018. So they said, this looks like a sell
Time
signal.
to run from the
Exactly. Contrarian. You don't want people to get too optimistic here, because then who else is going to come in? We also saw that from the likes of Cantor Fitzgerald yesterday, Peter Cheer at Academy Securities, saying right now we really just have a whirlwind of sell the news moments.
Well, it's interesting too, right? We had a record, was it on the Dow yesterday, correct?
Yes.
I'm just looking at the NASDAQ. It's up 32% so far this year. Just a quick check on the S&P. You probably know these without even thinking. It's up almost 12%. And where's the Dow here in 2020? The Dow is up about 4%.
Right. So that has really...
It wasn't a straight path. Let's put that out there. We know that.
Right. It has not been a straight path. The Dow has been gaining some ground lately with its cyclicality. The Russell 2000 now up more than 7%, kind of closing the gap between it and the S&P 500, now about a 5 percentage point gap or so. Another record high for the Russell 2000 today. That is one area that did enter the green. Small caps did get yet
It took a while
boost.
to get going, didn't it?
Right. This was the first record high that we got in recent days for the Russell since all the way back in 2018. Small caps were really getting punished. They were seen as shunned throughout the COVID-19.
How do we explain that? Is it just that they were so beaten up, Sarah, or is it the fundamentals?
So both.
Okay.
Frankly, small companies have had a much more difficult time in COVID-19. Also, the fact of the matter is a lot of them have higher debt loads. So when you are in a recession, when you don't know if your business is going to be able to run at full capacity, if even half capacity at that, it's really difficult for very small companies to, one, be able to borrow money, and two, also to be able to make enough money to pay off their debt.
So are you surprised by that, Riley? Because that's what I was thinking when you were talking about it. I'm like, well, wait a minute. I mean, these guys are still going to have a tough time for some time. I mean, we don't know about any stimulus coming to kind of help out the small guys, so...
Well, that's a worry. It depends where you really place your bets and where you focus on if you're optimistic. Because you can make the argument that we are in the midst of a sound economic recovery. Yes, we are dealing with a resurgence in COVID-19, but if we have a vaccine down the road, well, then we are going to normalize and these companies will be able to get back on their feet and they are going to see the biggest year-over-year gains. However, at the same time, you do have to wonder, well, how many of these companies are still going to be left in a very precarious
Right, get
position?
to the finish line, right?
Exactly.
Post-COVID-19 world.
Right, so yet to be seen, but right now there is a lot of optimism that at least since there is a finish line, because we know one day we will get that vaccine, as long as they can push through, they will see the largest gain once we get there.
I bet you'll know this without even like giving you too many clues. What stock is up 428% this year?
Tesla.
Well done. I mean, oh my God. And the headline after the close yesterday, right, about being put in the S&P 500. I love the stories about it might need to be done in 2 tranches because it's so big.
Right, and that has never, ever been done before, to be made clear. This is very
What does that mean,
unprecedented.
2 tranches?
So the idea is that they might introduce Tesla to the S&P 500 benchmark, not as a whole at first. They might have to introduce it because think about the S&P, it's market cap weighted.
Yeah.
Right now, if Tesla is introduced to the benchmark, it would have a more than 1% weighting. There isn't a stock that's going to leave the benchmark that can create a hole large enough to fit Tesla. So they're likely going to have to trim elsewhere. So maybe they will add it not at its full market cap potential originally, and then they'll start buying a little bit more, adding a little bit more to represent that weight, because there's $11 trillion in investment assets that are tied to the S&P 500. There's going to be a lot of money that has to move around to accommodate this.
And then I'm curious who has to come out because it's now more than... It's a couple names, right?
Well,
at least.
They've said that they're going to announce, I believe, one name right now. Okay. But the reality is there is no one name that, for any reason, would be deleted from the S&P 500, which is why it's likely, yes, you will have a name that leaves that at Tesla will be the official replacement for. However, they're likely going to have to trim across the board because there's no way that you're going to fit this company. I mean, as of today, after the boost, about $420 billion.
It's not the S&P 500 anyway. Just make it the S&P 508. I don't know, something like that. Sarah Ponczek, thank you so much. This is Bloomberg.
All right, Dave, you're up. Hi, my name is Dave.
Wilson, where are you? Wilson!
Just what do you think you're doing, Dave?
We're going for the price on Wilson.
Open up the door, it's Dave! Who? Dave!
Hey, Mr. Wilson!
Hey, Mr. Wilson. Dave Wilson, it's time for your stock of the day. Dave, what do you got?
I've got AXT, Carol. It's a supplier to the semiconductor industry. The company produces wafers and raw materials that go into the base for attaching a chip's components. That base is also known as a substrate. AXT was founded in 1996 and went public in 1998. The ticker is AXTI. The company share set a record in February 2000 and plunged 99% in the next 3 years or so. While most of the loss hasn't been recouped, AXT has risen since mid-March. The rebound accelerated after the company disclosed plans late yesterday to raise money in China, where its operations are based. AXT plans to merge 2 raw material suppliers with its wafer production unit, Beijing Tongmei Extel Technology, and sell a 7.1% stake in the combined business to Chinese private equity firms for $50 million. AXT eventually wants to take the unit public in China. Now, these plans sent AXT's shares to their biggest gain since January 2009. They rose more than 23%.
Gosh, talk about a pop, right, Dave?
You are not kidding. Now, the thing is, they want to set up an initial public offering on this new Chinese market for smaller, high-tech kind of companies. Thing is, though, they figure that probably won't happen until mid-2022 because they have to work their way through the bureaucracy. And one step in that is selling to these private equity investors.
So stay tuned, everybody. All right, Dave Wilson, thank you so much. Let's get back to world and national news. For that, it's over to Ed Baxter in San Francisco. Hey, Ed.
All right, Carol, hello there. Donald Trump has ordered the Pentagon to accelerate the drawdown of U.S. troops in Afghanistan and Iraq. He wants 2,500 in each. Acting Defense Secretary Chris Miller says no change from the plan.
This is consistent with our established plans and strategic objectives, supported by the American people, and does not equate to a change in U.S. policy or objectives.
In Afghanistan?
By January 15th, 2021, our forces, their size in Afghanistan will be 2,500 troops.
Iraq the same. This has been a campaign pledge by Mr. Trump. It comes in the transition to Joe Biden, who is still not getting briefings. Eyes, therefore, on the Georgia recount. Election Administrator Gabriel Sterling says nothing has really changed in the outcome.
The winner is the winner, and the person that came in second place came in second place. Now, to get ahead of some of the other questions, this hand audit we're doing right now is for the state to move to certification.
So it is just being done to get that certification. Meanwhile, the Pennsylvania Supreme Court has reversed a ruling that allowed Trump campaign observers to get within 6 feet of the ballot counting process, reversing a rare Trump campaign victory. New York City's COVID-19 positivity rate has stayed below the threshold to close back down.
And that means that not only are schools open today in New York City, schools will also be open tomorrow in New York City.
And Mayor Bill de Blasio says everyone in the city needs to get tested. And Boston Mayor Marty Walsh has Thanksgiving guidance telling everybody to just eat with their household and not allow anybody in. In San Francisco, I'm Ed Baxter. This is Bloomberg.
All right, Ed Baxter, thank you so much. You're listening to Bloomberg Business Week. Carol Massar along with Charlie Pellett. So our second most read story in the past 60 minutes on the Bloomberg terminal has to do with Goldman Sachs. And Charlie, I think you've been talking about it a bunch. Goldman planning a second round of job cuts after pause for the pandemic. So they're planning to trim their workforce for the second time in just 3 months as a moratorium on firings during the pandemic is ways to push to improve efficiency. Sounds like corporate speak.
And it wasn't just Goldman Sachs earlier this year, but big banks up and down Wall Street across the country. They also said they would try to refrain from broad firings as the pandemic erupted across the United States. Interesting today on a down day for the rest of the market, Goldman Sachs shares did advance today by just about 1% on that news.
Yeah, but it's interesting. And I think, the longer this pandemic goes on, and it depends on what kind of economy we continue to see or what we get on the other side of the virus, I'm sure a lot of companies, understandably so, are really looking internally and potentially, especially if you're publicly held, you've got to be thinking about, all your stakeholders, but you also have to think about your shareholders.
Indeed. And to your point, earlier in the year, you recall back in January, Goldman had that target for eliminating more than $1 billion in expenses, and it's been looking at ways to try to meet that goal.
Yeah, exactly. Hey, I didn't know if you also saw another Goldman story that was on the terminal, Lana Nguyen. Goldman Sachs, they've got their business catering specifically to high net worth individuals, has seen a surge in new assets since it bought registered investment advisor United Capital. They did that for $750 million last year. They're bringing in something like $80 million a week.
Yeah, and interesting, too, what the Joe Duran, founding partner at United Capital, had to say at a fintech conference yesterday. He said, quote, "We have more leads than we can service. We're probably looking to expand more in the Midwest, especially in the northern Midwest." So that's a nice problem to have.
It's a nice problem, but it also speaks to the wide gap that we have in wealth in our society. It's something that a lot of leaders are really trying to figure out and figure out a better way so that there's more wealth generation and distribution. This is Bloomberg.
hits, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. A reversal from yesterday's surge. It was a down day with the Dow and the S&P retreating from records. NASDAQ lower as well. Stocks pulled back as investor focus turned to the surge in virus cases. S&P slumped 17, down 0.5%. The Dow dropped 167, down 0.6%. NASDAQ lower by 24 points, down 0.2%. 10 years up 13.30. 10-year yield 0.86%. Gold down 0.4%, 18.81 the ounce. And West Texas Intermediate crude up 0.3%, 41.45 a barrel. One earnings report to pass along to you. Work at home, lazy boys. Second quarter adjusted EPS beating estimates. Second quarter comp sales up by 34%. I'm Charlie Pellet. That's the Bloomberg Business Flash.
Got it, Charlie. Thank you so much. Well, it was day 2 of the Bloomberg New Economy Forum here at Bloomberg. It's being done virtually. It's 4 days and covering 4 key pillars. And yesterday it was all about finance and trade. Today it was all about cities. Last evening, though, former President Bill Clinton caught up with former UK Prime Minister Tony Blair, and they talked about how U.S.-China relations will play out in the future.
That question will be able to be answered a little bit better when we see what happens after the change of government in the United States, how they decide to deal with China, how they decide to manage our clear disagreements over Hong Kong and the camps for the Uyghurs and the desperate need to work together for global development, to fight climate change, to deal with the COVID-19. But I think once we have a sense of that, then I believe that whatever the appropriate way of dealing with it is, you need an organized effort that begins with the end in mind.
And that, of course, was former President Bill Clinton speaking last night at the Bloomberg New Economy Forum. I want to bring in Bloomberg New Economy editorial director Andy Brown in our Bloomberg Interactive Brokers studio. So he's talking about, we'll have to wait and see what happens with the new administration. But you and I have talked before. I mean, you don't necessarily anticipate radically different policy, do you, when it comes to the U.S. and China? But maybe the way they interact might be different.
No, it was interesting, the conversations yesterday. Quite a lot of hard-nosed realism about China. You just heard Bill Clinton talking about human rights and the internment camps in Xinjiang. Tony Blair talked about China's external aggression and internal repression. Quite a bit of sympathy for that view and support for the idea that you have to push back against that and defend liberal values, but at the same time, a realization that confrontation with China is spiraling out of control. And as Henry Kissinger said, risks war. He drew parallels between the situation now and in the run-up to World War I. And so at the same time as talking in these sort of, in Kissinger's case, almost apocalyptic terms, there was this sense that we've got to figure out ways of collaborating. And in that context, the sense that perhaps a Biden presidency would lead to a somewhat more constructive relationship and a collaboration on some of these key areas like climate change and pandemic control.
Andy, when it comes to the U.S. relationship with China, will it be more constructive because they will figure out also in a new administration how to work more productively with their allies, the U.S.? So it's a group of individuals, a group of countries in terms of trying to figure it out with China.
I think that's right. I think the expectation is that Biden is going to pull back from some of the measures that the Trump administration took, which were manifestly not in America's own interest, like tariffs, which are paid for by American consumers, like these tit-for-tat expulsions of journalists. How on earth does it benefit the United States not to have American journalists reporting in China on the world's second largest economy? I don't think you're going to see a big difference in economic policy. Certainly, you could see an escalation in pressure on China on human rights over Xinjiang, which Clinton mentioned, and also on Hong Kong. But again, this imperative to find places where you can collaborate.
So let's spin it forward today. Cities. We were listening. I was up there with you. An incredible lineup of panels talking about the result, what we've learned from history in terms of past pandemics on cities, how we can learn going forward, smarter cities, digital cities. What were some of your key takeaways?
Yeah, just the way that pandemics in the past have acted as spurs to urban renewal. Cholera and yellow fever at the end of the 19th century that led to, for instance, Paris tearing down dingy tenements and building broad boulevards and squares, and London installed a sewerage system. New York laid out Central Park and a heating system in Manhattan that enabled office workers to open windows for ventilation even in winter. And I think a sense of cautious optimism that this coronavirus pandemic could actually lead to positive urban change. And we're starting to see it already in bicycle lanes and street cafes. But critically, a focus and a realization that we're not going to solve these pandemic problems without addressing the deeper maladies in our societies, inequalities, racism in particular.
Tonight, what's going to go on?
Well, we're talking about financing the real economy, how we make financial systems work, not for the benefit of Wall Street, for the benefit of Main Street, how we get money into the real economy. You know, we've seen this great disconnect, even as this conference has been underway, between Wall Street hitting record highs and mom and pop entrepreneur
wide gap
businesses going under. You know, they can't tap these soaring equity markets, and the poor people that are disproportionately affected by COVID-19, of course, don't own any stock at all. How do you fix that? Critical question.
Well, looking forward to more programming tomorrow. Thank you so much. Really appreciate it.
Great to be with you, Carol. Thanks.
You bet. Bloomberg New Economy Editorial Director Andy Brown talking about the Bloomberg New Economy Forum, as I mentioned, day 2, and looking today at cities. And I highly recommend that you check out Bloomberg.com for more of their programming. You are listening to Bloomberg Business Week. Just want to remind you how stocks closed on this Tuesday, and we did see kind of an interesting trade off our lows of the day. S&P 500 just down about 17 points, down 0.5%. Dow Jones Industrial Average a decline of 0.6%, and the NASDAQ down about 0.2%. So again, just really highly recommend that you check out some of those interviews, because they really are dealing with all that ails us, those big social problems, those big political problems, those big capitalistic problems. And you've got leaders from all over the world really talking about the issues. And as Andy says, really trying to figure out those gaps that exist in our society that have really been laid bare as a result of the global pandemic, and also the racial injustices that we've seen laid out in 2020. This is Bloomberg.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 1061. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
You are listening to Bloomberg Business Week. I'm Carol Masser in our Bloomberg Interactive Broker Studio. Coming up, we got to do a deep dive into Amazon. Big news today. Certainly caught all of our attention early this morning. It's been among our most read stories on the Bloomberg terminal all day. So we're going to dig into that in just a moment. First up, though, back to your top business stories. Some of the news after the close. Here is Charlie Pellet.
Thank you very much. In a nutshell, Amazon higher, pharmacy stocks lower, CVS, Walgreens, Boots Alliance, and Rite Aid all plunging today. Goldman Sachs preparing to trim its workforce for the second time in just 3 months as a moratorium on firings during the pandemic gives way to a push to improve efficiency. Now, sources tell Bloomberg this round is not expected to exceed the roughly 400 positions that the bank began eliminating in September. Goldman Sachs shares did advance today, Goldman up by just about 1%. Sources tell Bloomberg Robinhood Markets, that's the trading platform that has proved popular with novice investors, has asked banks to pitch for roles in an initial public offering. The sources say the company is aiming to go public as soon as the first quarter of 2021. Stocks retreated from records as investor focus turned to the surge in virus cases and new lockdown measures, overshadowing optimism that COVID-19 vaccines will eventually end the pandemic. As for the market backdrop, Mike Wilson is chief U.S. equity strategist at Morgan Stanley.
We find ourselves at a juxtaposition between the 12-month view, which is unequivocally bullish to us, with this year-end conundrum around, we have a vaccine, but we have to deal with the rising case counts, not to mention just getting through the runoff elections and positioning and sentiment, which has gotten a little frothy.
Judy Shelton's nomination to the Federal Reserve blocked today in the Senate, a stunning defeat for Senate Majority Leader Mitch McConnell and a blow to President Trump's drive to reshape the central bank before he leaves office. Stocks lower, retreating from records. S&P down 17, a drop of 0.5%. The Dow down 167, lower by 0.6%. NASDAQ down 24, down 0.2%. Again, both the Dow and S&P retreating from yesterday's records. 10-year yield 0.86%. Gold down 0.4%, 18.81 the ounce, and West Texas Intermediate crude down 0.3%, 41.21 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You're listening to Bloomberg Business Week. So Amazon taking another step and I got to say, whenever they do that in any direction, the world reacts and kind of redirects. Our most read story, or among our most read stories, I should say, was most read earlier today. Amazon, as Charlie mentioned, unveiling its biggest push into selling prescription drugs with the launch of a digital pharmacy and discounts for paying U.S. Prime members that really did send shockwaves through shares of drugstore chains and distributors in today's session. We've got a blockbuster duo on Amazon. Joining us is Brad Stone, Senior Executive Editor of Global Technology, author of The Everything Store, about Jeff Bezos and the age of Amazon. Brad is with us from San Francisco. Also with us is Bloomberg News technology reporter Matt Day on the phone in Seattle. So let me start with you, Brad. This news, I feel like it's just, we knew Amazon was interested in healthcare, but they're kind of spreading their wings here.
Right, Carol. And I love Amazon history, so let me rewind a bit.
Yeah.
All the way back to 1998, okay? Jeff Bezos and venture capitalist John Doerr, the famed investor, were co-founders of a company called drugstore.com. So even back then in the early days, Bezos was thinking about what else he could sell. Now, they started as another company, which, if you know anything about Bezos or Amazon, is a bad way to do it because he kind of only cares on about what's between his walls. So drugstore.com didn't go anywhere, but fast forward about a decade, about 2017, after Amazon buys Whole Foods, and it starts taking out state licenses to sell pharmaceuticals. So it was always part of the vision. And then, of course, in 2018, they bought PillPack for a little under $1 billion. And now the news this week. It's always been part of the kind of manifest destiny for Bezos, and he's finally getting there.
I was just going to say, if anything, it shows Jeff Bezos has patience when he's interested in a market, no matter how long it takes. Matt, come on in on the conversation and about the news. How significant is this, and how significant could it be for Amazon?
potentially hugely significant. You think about all of the areas of consumer spending, and Amazon has a foot in a great deal of them. Not pharmacy until today, at least not on Amazon.com. We're talking hundreds of billions of dollars in U.S. prescriptions a year. If Amazon even, has a Me Too offering and grabs a slice of that, that's potentially very lucrative for this company.
Well, and it's interesting too, though. I mean, let's put it out there. I mean, how easy is it to ultimately do and kind of get customers? We're so entrenched, Matt, in terms of how we buy our pharmaceuticals. We've got our healthcare plans. We go to CVS. We go to Duane Reade. I do wonder how easy it is for Amazon to kind of wiggle its way into this.
That's right, and it definitely is a hurdle that Amazon faces with this, that they don't. And the vast majority of goods they sell, you need to get it prescribed by a doctor, right? That's a picking up the phone type of act that you don't have to face for most of the things you buy on there. I think where people who are optimistic for Amazon on this venture, where they chime in, is that where you might have some loyalty to a grocery store or the corner store, maybe less so in the case of a pharmacy where you're just getting an identical product, signed off on by your doctor, particularly for households that are already big Amazon fans.
Well, and Brad, it is interesting. I love the history part of it because it does remind us, that this has kind of always been on Jeff Bezos' radar. And they also did buy, was it PillPack a couple of years ago? Right.
And not just PillPack. It's really all part of this kind of multifaceted effort to crack the multi-trillion-dollar healthcare market. And they're looking at a lot of different things. They've got these Amazon Care kind of infirmaries that are in the Seattle area, currently serving only Amazon employees. They started this joint venture, Haven Healthcare, with Berkshire Hathaway and J.P. Morgan. Right. That was supposed to lower healthcare costs, and then Atul Gawande, the CEO, kind of left and recently joined President-elect Biden's COVID-19 task force. Alexa's been doing a lot, and in healthcare, you can talk to an Alexa-enabled personal physician. Amazon Business, they're armed to sell to businesses. Has a big business with hospitals, labs, and government agencies. So it's all part of, this is what Amazon does, kind of parallel innovation, kind of searching for a way into a market. They've done it in groceries, right, with Whole Foods and these Amazon Fresh grocery stores and fresh delivery. And here we're right at the very beginning of an effort to crack a big market for Amazon, and really one of the ways that Bezos can bring Amazon to that next level of growth. It's by tapping really big opportunities.
I want to talk more a little bit about the logistics and how it will work, and again, how it gets kind of customers into, listen, so many of us already are in the Amazon infrastructure by getting packages or being part of Prime. I got to do a little bit of news, guys, world and national news, but then I'll come back and continue the conversation. We are talking about Amazon, certainly one of our, if not or if not the biggest corporate story, I feel like, of the day here. We're going to get back to Brad Stone, Senior Executive Editor of Global Technology at Bloomberg News, and Matt Day, Technology Reporter at Bloomberg News, on the phone from Seattle. And we definitely did see shares of pharmaceutical companies in the drugstores definitely move lower on this news today. All right, let's get back to World and National News. Over to Ed Baxter in San Francisco. Hey, Ed.
Hey, Carol. Donald Trump seriously considering a 2024 bid for president. CBS reporting he has mentioned it to his top advisors repeatedly in recent days. Meanwhile, the Republican Secretary of State in Georgia, Brad Raffensperger, says Trump's frequent and unsubstantiated accusations of mail-in voting fraud likely contributed to the 24,500 Republicans who voted in the primary not voting in the general for Donald Trump, which he says may have accounted for the Biden advantage in the state altogether. Meanwhile, nothing has changed in the vote count there, and they reportedly are just working through the count to get certification. And all eyes, meanwhile, are on the two Georgia Senate seats. Longtime pollster Frank Luntz says while behind, both are doable for the Democrats with a lot at stake.
If the Democrats win this, it means that Trump's tax cuts are repealed. It means that Puerto Rico and D.C. become a state. It means that they end the filibuster rules. So much changes if the Democrats win both of those seats.
Now, Luntz on Bloomberg's Balance of Power with David Weston. Donald Trump, meanwhile, has ordered the Pentagon to accelerate the drawdown of troops in Afghanistan and Iraq, but Acting Defense Secretary Chris Miller says security will be maintained.
If the forces of terror, instability, division, and hate begin a deliberate campaign to disrupt our efforts, we stand ready to apply the capabilities required to thwart them.
Troop strength down to 2,500 in both. This is a Trump campaign pledge, but comes during the transition with a Biden campaign, which is getting no briefings. The heads of Facebook and Twitter in front of a Senate panel today accused of anti-Trump bias. Facebook's Mark Zuckerberg says they have taken down over 100 bad actors to date. In San Francisco, I'm Ed Baxter. This is Bloomberg.
All right, Ed Baxter, thank you so much. Charlie Pellet joining me right now, and we're going to get back to the news out of Amazon today about them planning to start selling prescription drugs to its Prime members in the United States. And forgive me, I'm getting distracted because I wanted to find the other story that caught my attention earlier in the day that had to do with Amazon, Charlie. And it talks about how they are urging shoppers to order early to avoid shipping delays.
Yeah, focus. Deep breath, Carol Massar. Yeah, they are. They're saying, they're offering so-called Black Friday worthy deals and telling people that in this abnormal year, better order early or perhaps risk disappointment.
Right, exactly. And last year, you saw the company targeting procrastinators by pledging to kind of whisk orders to them in one day or less. I have to tell you, that was definitely in my psyche. And I realized, okay, well, I have, Amazon says I have, I can kind of order up right up until the day before Christmas Eve and I'll get my present. But they're really doing it differently. And I think they need to be thinking, right, about the infrastructure and the strategy and what's going to take to make sure they get everything out.
Yeah, and a slightly different tack with this story here. I'm just very curious how the likes of both UPS and FedEx are going to keep up with this heightened demand. Now, obviously, Amazon, it's got its own shipping service and own delivery service. But even so, more of us will be ordering presents from home. More of us will be shipping things from home, and going to be very interesting to see how the likes of the big logistics companies are able to keep track of what's going on leading up to the holiday season here.
Listen, could be a logistics nightmare. What's interesting, this story also talks, keep in mind that Amazon hired more than 250,000 warehouse workers this year, pledging to add an additional 100,000 seasonal bodies. And so they have been opening an average of one shipping facility a day, according to one logistics consulting firm. So they have definitely been, ramping up to make sure they can do it. But I do wonder how this season's going to be different because we've all been home.
Exactly. And I also wonder, too, once you get into the order at home habit, how might that potentially change for retailers down the road?
Focus, and order ahead. That's the message here. All right, Charlie Pellet, thank you so much. You're listening to Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business
From Bloomberg World Headquarters, I'm Charlie Pellet. The virus back in focus today on Wall Street. Stocks eased off their records as investor focus shifted to the surge in cases, along with new lockdown measures, including Illinois, that overshadowed optimism that COVID-19 vaccines will eventually end the pandemic. S&P 500 index down 17, a drop today of 0.5%. The Dow down 167, down 0.6%. And NASDAQ fell 24 points, lower by 0.2%. 10-year up 14.30, 10-year yield 0.85%. Gold down 0.4%, 18.80 the ounce. And West Texas Intermediate crude lower, little change, down 2 cents, 41.32 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, got it, Charlie. Thanks so much. Want to get right back to Matt Day, technology reporter at Bloomberg News, with us from Seattle. Brad Stone with us, senior executive editor of global technology at Bloomberg News, and of course, author of the Everything Store about Jeff Bezos, in the age of Amazon. He is on the phone from San Francisco. So, Brad, man, I wouldn't, underestimate Jeff Bezos and Amazon when it comes to anything. So, where do you see this going ultimately? Do you anticipate, or is the industry or observers of Amazon talking about, man, they're going to become a really big player when it comes to healthcare? And I think about disruption right now leads to innovation. We think about how we can do things in a different way, in a better way. And I wonder if this could be it or part of it.
Well, those are good points, Carol, but let me say a couple of things. One, in today's announcement, Amazon's not necessarily doing anything that's innovative. Okay, GoodRx is a 10-year-old Santa Monica company. It basically does the same thing. It fulfills prescriptions online. It delivers them in a couple of days. It offers discounts on some generic items. Amazon's doing the same thing, and the other pharmacies do that as well. But you look today, you see CVS and Walgreens, Boots, and Rite Aid shares just slide 15-20%.
Yeah.
And I think back to Whole Foods, when Amazon bought Whole Foods, and the same thing happened to Kroger's and all the big supermarket chains. But then those companies bounced back because I think investors realize these are complicated markets, and ambition is one thing, but execution is another. And I think this is the beginning of Amazon innovating in this space, but not the end. We're probably going to see more from them if they really want to distinguish themselves.
Well, and I do wonder, Matt, too, how they see this. I mean, this is a company with expected to have about $379 billion in revenue this year. I mean, they obviously would like to, if they're going to go after it, see a decent market size. But I wonder, could it be big enough that kind of keeps the needle moving at Amazon, and certainly investor enthusiasm about the company?
It's a great question, and Jeff Bezos said over the years, listen, we don't really pursue market opportunities unless they have a potential to go, hyperscale big, right? So
yeah.
Just the fact that they've zeroed in on this is evidence of that. I think because they have just such a vast audience, I think they would certainly have expectations that they can convert some of those people to loyal pharmacy shoppers. It's going to be unclear for perhaps years whether it's a profit center for them or whether they're really making a mark in the industry. But I think they're patient, as we've talked about, and just their vast existing operations and customer base gives them some ability to kind of shoehorn folks into a pharmacy relationship with them.
Well, that's what I think about too, Brad, their customer base, right? You, me, Matt, I'm sure we're all customers, prime or otherwise. You think about that network of people that's already in the Amazon system.
That's true, but I want to say two things.
Sure.
One, I feel like prescription drugs are different.
Okay.
It's not like ordering food or other items for that matter. Your doctor prescribes you medicine. You kind of roll down to the pharmacy in the lobby or to your local drugstore, and you get it. The second thing is that this is a difficult business. I mean, I think Matt said this earlier. There's no one-click wondery, right? You need a prescription. The supply chain's different. There are lots of regulations around how you can fulfill drugs. You can't just open up a space on the second floor of the fulfillment center by the highway. That it needs to be done differently. And then, there are these middlemen, the pharmacy benefit managers that dominate this market, that dominate the sale of high-profile drugs. Amazon's not even getting into a certain class of that kind of level 2 painkiller opioid drug. There's a whole litany of headaches around that. So I think, they've got a long way to go. This is a complicated market, and I think maybe unlike groceries where we're just now seeing them get some traction. This is going to be the beginning of a long path for Amazon.
But I do wonder who Amazon's watching. Is it Walmart and they're already they're already selling prescription drugs, or some of the other big box retailers? I mean, Brad, who do you think Amazon, not that who do they want to be when they grow up? I don't think that, but I mean, I wonder who they look to, like, okay, that's a really great market and that's what we need to be a part of.
Right. Well, Matt and I can pretty much recite the Amazon boilerplate on this question, which is they will say, they don't look at their competitors, they just satisfy their customers. But the true answer, and I think you're right, is the Walmarts, the Walgreens, the CVSs. A lot of those companies have rooted their customer relationships in pharmaceuticals and prescription drugs, in addition to fresh food, particularly with Walmart. And we've seen over the past couple of years, Amazon being on a kind of mission to fill in those gaps in its competitive offering, and maybe not to catch up, but to make sure that these markets can't be the launching point for a competitor to come in and attack some of the strongholds of Amazon's dominance.
All right, I feel so bad that I disappointed you guys in asking such not an easy question, but maybe predictable question in terms of knowing what Amazon would say. Matt, do you want to add on anything to that?
I think to Brad's point earlier about innovation, one of the asterisks people are zooming in on today is the fact that they're using an existing pharmacy benefit manager, right? Mm-hmm. So they're, rather than Amazon going out and reinventing the wheel, they're definitely taking some kind of baby steps and really meeting the industry where they already were in this case.
Hey, before you guys go, anything else you think our audience, Brad or Matt, that you think our audience should know before we? I just want to ask you about one other story that's on the terminal.
Well, you and Charlie talked about why Amazon's trying to get people to order early. We call it Shipageddon, and you guys kind of only mentioned half the story. It's not just the COVID-inspired demand that's going up, but it's Amazon's ability to fulfill orders that's endangered now with COVID rampaging across the country. Mm-hmm. Absenteeism in the fulfillment centers is very high, so they've got a major problem on their hands.
Yeah, it's interesting. I talked with the Chipotle CEO, too, when we were talking about the virus, and that was one of the things that was kind of top of mind, his ability to have workers, especially concerned about the safety of his workers, and then the ability, to have enough people staffed to kind of keep the businesses going. And, Matt, this has got to be something that Amazon is thinking about as well, as Brad just pointed out.
Oh, yeah, it was a huge headache for Amazon earlier in the year. You go back to March, April, May, some facilities were dealing with 50%, 30% absenteeism in their warehouses. Folks would just take shelter at home rather than go to work. I think Amazon is definitely worried about a similar occurrence as things get bad, really across the country.
All right, I'm going to leave it there. You guys, thank you so much. Really appreciate the deep dive on Amazon today. Really, really thoughtful. Matt Day, technology reporter at Bloomberg News, on the phone from Seattle, and then our own Brad Stone, senior executive editor of global technology at Bloomberg News, joining us on the phone from San Francisco. If you haven't checked out Brad's book, you should. The Everything Store about Jeff Bezos and the age of Amazon. And Amazon, as we said earlier, really one of our big stories, certainly on the terminal, and just checking on how that stock closed. We did see it rally a little bit today, initially up about 2% or just shy of 2%, but by the end of the day, little change, just down about just up about 0.1%. But it did impact some of those companies that play in that prescription drug space. CVS was down about 8.6%, so certainly some nervousness. But I thought it was really important, the point that Brad and Matt brought out, that when Amazon initially got into the supermarket space by buying up Whole Foods, you did see those traditional supermarket companies and stocks actually take a dip on that news. And then over time, you saw them regain their ground. So maybe something to think about in terms of how the trade may play out. So we'll keep an eye on CVS and the likes of those companies. All right, you're listening to Bloomberg Business Week. Coming up, we're going to talk about a favorite topic of mine, and that is the real estate market. We continue to assess the impact on commercial and residential real estate, as it seems like a lot of Americans are fleeing those big cities because of COVID. So we'll get the thoughts from the co-founder and managing partner at Romer DeBoss. That's coming up right here on Bloomberg.
Bloomberg World Headquarters, I'm Charlie Pellet. Goldman Sachs Group is preparing to trim its workforce for the second time in just 3 months as a moratorium on firings during the pandemic gives way to a push to improve efficiency. Sources say this round is not expected to exceed the roughly 400 positions the bank began eliminating in September. Goldman Sachs shares up today by 1%. Sources tell Bloomberg Robinhood Markets, the trading platform that has proved popular with novice investors, is asking banks to pitch for roles in an initial public offering. Those sources say Robinhood aiming to go public as soon as the first quarter of 2021. Retail sales moderated in October, casting some doubt on the holiday shopping season. Strength in online sales was tempered by weakness in other retail sectors, especially clothing and sporting goods, as the coronavirus gathered momentum. As for the economic outlook, Bill Dudley is a former New York Fed president, now a Bloomberg opinion columnist.
To the extent that the pandemic worsens and we have more restrictions, that's going to exert downward pressure on the economic data. And I think it's also important to recognize that when we get data like what we got today in retail sales, we're really looking in the rearview mirror. I mean, this data is October data, first half of October data. We're in a much worse place today than we were in the first half.
Big gains, though, for a lot of retail names. Macy's, for example, surging 9.7% today. Kohl's stores up 11.6%. Costco, after that special $10 dividend, up today by 0.6%. Stocks did pull back from records. The S&P fell 17 points today, down 0.5%. The Dow lower by 167 points, down 0.6. Nasdaq down 24, a drop of 0.2%. 10-year up 15.30 seconds. 10-year yield 0.85%. Gold 18.80 the ounce. Little change now, up 5 cents. West Texas Intermediate crude up 0.2%, 41.40 a barrel. Again, recapping, S&P fell 17, down 0.5%. I'm Charlie Pellet. That's a Bloomberg Business Flash.
You're listening to Bloomberg Business Week with Carol Masser on Bloomberg Radio.
You are listening to Bloomberg Business Week. I'm Carol Masser in our Bloomberg Interactive Brokers studio. We had a few real estate headlines today. Singapore home sales falling, central London rents plummeting as residents are going to the suburbs. Office workers wanting to keep working at home, just kind of not every day. I do love talking about real estate. And our next guest, we caught up with him in late September. So let's see how his world has changed over the last month and a half. Joining us once again is Pierre DeBas, co-founder, managing partner of Romer DeBas. It's a law firm specializing in real estate and other financial services. He's back with us on the phone in New York City. Pierre, nice to have you back with us.